rates lowest in 20 years. Unemployment for black and brown Americans remains near historic lows. Think about what actually means for workers in Alabama and Ohio and North Dakota and Louisiana and Minnesota and South Carolina. What that actually means for workers all over the country. It means Americans have more opportunity and choice in their lives, even in places they haven't seen a lot of options in recent years. It means people have the power to demand raises and retirement security and paid sick days and control over their schedules. It means more Americans have the dignity of work that comes with a good job that can provide for your family. And look where that kind of power for workers is taking us. Last month, wage growth outpaced inflation. That's the way it should be. Today's hearing comes at a critical time. Last week, the Fed decided to pause interest rate hikes after 10 consecutive increases and to maintain the rate at its current level. For the many of us who are concerned that further rate hikes could do more harm than good, it's welcome news. The challenge you face, Chair Powell, is to ensure that workers continue to see higher wages while also continuing to rein in inflation. In previous hearings, you've noted with justifiable pride how careful management of the economy helped millions of workers return to the job market. It's those workers who stand to lose the most if the Fed overdoes its rate hikes, loses sight of the dual mandate, and drives the unemployment rate back up. As you've also noted, Mr. Chair, increasing interest rates is not the only tool we have to fight inflation. The Fed is not the only one with a role to play. Congress, the administration, everyone in government, and corporate boardrooms must do their part. There's no reason we can't continue coming together to bring prices down. More policymakers are finally recognizing what those of us in Ohio have known for years, that outsourcing the production of pretty much everything may mean higher profits in the short term, but it won't lead to a resilient economy with a strong middle class in the long term. We've taken steps to strengthen our supply chains in hiring and been bringing critical manufacturing back to the U.S., the CHIPS Act, the bipartisan infrastructure law, a number of things. We must continue that progress. Instead of lowering demand, which is just economics textbook jargon for making people poor, laying off workers, denying raises. Instead of lowering demand, we can produce more, we can build more, we can grow the economy from the middle out. It's also our first semi-annual report from the Fed since the string of bank failures this spring. Those failures were caused by the same issue at the heart of so many of our economic problems. It's the Wall Street business model. Executives lay off workers. They put short-term increases in quarterly profits and their own compensation above everything and everyone else. At Silicon Valley Bank and Signature Bank, those in charge pushed their banks to grow too big, too fast. They made risky bets. They got massive profits. Executives were paying themselves bonuses right up until the moment that at least one of these banks crashed. To most Americans, that's not surprising. People have gotten all too used to big bankers treating the industry more like a game, or maybe more precisely, an endless ATM for themselves.
OI is concentrated at 43.50.
Price if things go wrong. Mr. Chairman, as Senator Scott and I teamed up on a 21-2 vote yesterday, those days for bank executives are over. Chair Powell, I look forward to hearing today how the Fed will protect American workers in the fight against inflation and promote an economy with a strong, growing middle class. Senator Scott.
Thank you, Chairman. Chair Powell, thanks for joining us today. Such an important time. Your last appearance before this committee was about 4 months ago, just days before the collapse of two banks. And while we continue to investigate those bank failures, it's important to examine the macro factors such as rising interest rates that contributed to the bank failures and the current economic stresses American families face every single day. Looking through the lens, I want to turn to you in your role as Chairman of the Federal Reserve, a role that requires
the bulls are loose, rein them in.
The American people
Why? Because we filled the gap?
And the best we can offer them. The greatest opportunity to succeed and the strongest tools to pave their path. Unfortunately, the bank failures earlier this year.
Strong going middle class, bearish, sell.
But thankfully, our healthy and well-managed institutions stepped up, and we have been able to weather the storm. However, I've been consistently disappointed in your Deputy Vice Chair of Supervision, Michael Barr. Just yesterday, this committee passed, as Chairman Brown just said, near unanimous legislation to encourage good corporate governance. But not just that. we also wanted to focus on the supervisory failure that was a part of the legislation.
Yes, found a little
Those are
support
not
at
the
4,400.
same actions taken
Not
by
a ton,
Michael
but a
Barr.
little.
I asked him twice when he was here before the committee if he would fire bad bank
interest is still
supervisors
concentrated
for
at
the supervisory neglect that
4,350.
contributed to the epic failures of SVB and
Which
Signature.
is also kind of our
He would not commit to doing
front-weighted
anything.
gamma
And
neutral.
I would ask you in your role as the
a
active
bounce here,
executive
not
officer,
unexpected.
if you would take
Looks like it
some
could go
action
as high as
firing
43.
those
70?
responsible for missing what was
Right
glaringly
now?
obvious, now to all of America, certainly should have been obvious to the supervisors. I've said from the beginning that this has been a failure in three parts, the SVB and Signature. It was a failure of the bank execs. The action that we took 21-2 yesterday reinforces Congress is willing to take the lead and hold bank executives accountable. Second failure was a supervisory failure, and that requires the Fed to hold folks accountable just like Congress did.
I didn't check the cat's tail for bullish
inflationary
indicators.
economy that has drove prices really high and resulted in 10 rate increases from you all. In the wake of Silicon Valley Bank's downfall, as the vice chair released his report on the failures, we heard directly from you that your role was to announce it, to get briefed on it, but not necessarily to be involved in the work of it. So my question is, as you watch Vice Chair Barr roll out higher capital standards, it seems like your very clear statements is that you will be supporting as well as working to implement Vice Chair Barr's recommendations. But as you know, that the other members of the board, Governor Boatman has recently said that Mr. Barr wrote a report on Silicon Valley Bank's failure that provided his conclusions and went on to state that the report should be used to help guide discussions among policymakers, not necessarily just to rush towards implementation of Vice Chair Barr's recommendations. I'd love to hear your thoughts on that path forward, if in fact your job is to rubber stamp the decisions of Vice Chair Barr, or is your responsibility to take into consideration the Vice Chair's recommendations and then chart a path that seems to be consistent with what is in the best interest of our nation and, frankly, of our financial institutions? I do not believe that increasing significantly the capital standards is in the best interest of small businesses or people looking for loans. The more capital we put on the sidelines, the less
Christ,
capital
man.
there
Could they be
is for
any
us
more
to
obviously
see our
in the
financial
pocket of
institutions
big banks?
loaning the money out. I look forward to continue our discussion during the
At least
question
some
and answer
fucking
time.
discretion.
Thanks, Mr. Scott. Today we'll hear from the Chair of the Federal Reserve, Jerome Powell, on monetary policy and the state of our economy. Thank you for your public service, Chair Powell, and please present your testimony. Thank you.
Thank you, Chairman Brown. Thank you, Ranking Member Scott, and other members of the committee. I appreciate
He's
the
not wearing his
opportunity to
JP
present the
Morgan
Federal Reserve's
lapel pin,
semi-annual
at
monetary
least.
policy report. We at the Fed remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain
It's
strongly
hilarious
committed
to watch.
bringing
This meeting
inflation
is
back
brought
down
to
to our
you by
2% goal.
BlackRock.
Price stability is the responsibility of the Federal Reserve, and without it, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. I'll review the current economic situation and then turn to monetary policy. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a
Yep,
modest
same
pace.
speech, fifth
Although
time.
growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be
Last time
weighing
he
on
said the
business
exact
fixed
same
investment.
thing to Congress.
The labor
and the
market
Senate.
remains very tight. Over the first 5 months of the year, job gains
He is
averaged
also
a
wearing the
robust
same suit and tie as
314,000
yesterday.
jobs
I don't
per
think
month.
Powell gives a shit
The unemployment
anymore.
rate moved up, but it remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation
His
rate
wife's
has
not
moved up
letting
in
him come
recent
home
months,
till he fixes
especially
inflation.
for individuals aged 25 to 54. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%.
He should
Over
clip
the
this
12
and
months
share it on
ending
his
in April,
Discord.
total personal consumption, or PCE, prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index, or CPI, came in at 4.0%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to
You could
remain
have
well
just-
anchored, as reflected
Thunder,
in a
you could
broad
just
range
stop
of
it. Don't
surveys of
over-leverage
households,
into
businesses, and forecasters,
anything.
as well as measures from
But
financial
I'm
markets.
sorry to hear that, man.
With inflation remaining well above our longer-run goal of 2% and with labor market conditions remaining tight, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points since early last year, and we've continued to reduce our security holdings at a brisk pace.
Brisk.
We've been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation.
Is it new? I thought he said brisk
The
yesterday.
economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we have come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the FOMC decided last week to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our
This is
securities
breaking
holdings.
down a little. No
Nearly
momentum
all
yet, though.
FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at last week's meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, we will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions.
Sorry, I'm
Restoring
just looking at
price
futures
stability
real
is
quick.
essential to set the stage for
44,
achieving
10,
maximum
75.
employment and stable prices over the long run. Before concluding, let me briefly address the condition of the banking sector. The U.S. banking system is sound and resilient. As detailed in the box on financial stability in the June Monetary Policy Report, the Federal Reserve, together with the Treasury Department and the FDIC, took decisive action in March to protect the U.S. economy and to strengthen public confidence in our banking system. The recent bank failures, including the failure of Silicon Valley Bank and the resulting bank stress, have highlighted the importance of ensuring that we have the appropriate rules and supervisory practices for banks of this size. We're committed to addressing these vulnerabilities to make for a stronger and more resilient banking system. To conclude, we understand that our
Thunder.
actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at
Based
the
off
Fed will do
Gamma,
everything we
it
can
seems much
to
more
achieve
likely
our
that we're
maximum
about to go
employment and price
43.80,
stability
90,
goals. Thank you.
then go back to
Thank you,
43.50
Chair Powell.
today. Based off Gamma? I mean,
Paul
based
Donovan
off
at
Gamma,
UBS
we
has
would
discussed the role that corporate
probably return to
profiteering plays in
43.50.
persistent inflation. While inflation has risen,
not-
has
there's
fallen
not
from
particularly a
9%,
lot
as you know, it
of
has peaked to
interest.
4%. prices continue to climb because of supply
43, 80,
shortages
and 90, yeah.
and corporate profiteering, what we're
There's a little
starting to
bit.
call greedflation. Given that rising interest rates certainly won't solve greedflation, why maintain interest rates at the current level or even consider, as you suggested, raising them again, given the risk of harming the livelihoods of more than 1.5 million workers and their families?
Mr. Chairman, the committee broadly feels that while monetary policy has gotten to an appropriately restrictive level, if the economy performs about as expected, that it will be appropriate to raise hikes again this year and perhaps twice. A strong majority of the committee feels that it will be appropriate again, assuming that the economy performs as expected 2 times before the end of this year. We've come very far, and the reason why we maintained our rate at the last meeting was to give ourselves more time to stretch out the time for making these decisions. We moved very quickly at the beginning, and we've gradually slowed down. This is just a continuation of that. But we are committed to getting inflation under control, and the strong majority of the committee feels that we're close, but there's a little further to go with rate hikes.
Well, thank you for that answer, but Mr. Chair, what Fed governors call cooling down, regular people where I live call them layoffs. I mean, the question is, why should working families continue to bear the cost of fighting inflation? Why should they lose their jobs so that corporate profits can continue to balloon? Let me move to the next question. Our economy's created 13 million new jobs in the last 2.5 years. Black and Latino workers with the lowest incomes have seen the greatest
he's
gains
not wrong.
in job opportunity and wage growth. What the Fed considers too hot an economy has given these workers their first leg up in decades, if ever. We know that job losses will hurt those same workers the most. How will higher interest rates and the resulting job losses disproportionately impact Black and Latino and low-income workers?
Well, we have quite an unusual situation in the labor market where we've had persistently much higher demand for workers than the available supply of workers. So some of the
Has he brought
process
up
of getting
banking
demand and supply
capital
back
yet?
into alignment has been taking place through declining job openings. And
He
through
sounds
lower
like the
quits
Marlboro
rates
Man
and
after
through
the Marlboro Man
wages
got
that are moving,
CPOD.
that are still very high, but moving into more sustainable levels of increase. So
COPD.
actually, there hasn't been a meaningful increase in unemployment. The unemployment rate has bounced
Are
around.
we breaking
at
below
historically low levels,
43.50 today?
and that's fine.
maybe.
That would be the perfect way for this.
We'll
to
probably
continue
stay
to
pretty
happen.
range
There's no
bound
guarantee
through
that will
most of
happen.
this meeting.
I would just say that it is working families who suffer most directly and quickly from high inflation, and it is for the benefit of those people and all other people that we need to restore 2% inflation in this country on a sustained basis.
And thank you, but the dual mandate suggests that those workers, that obviously you look out for those jobs and those workers, but we also know that those workers are the first to be laid off. And I would hope that in your next meeting, the Fed
Why is J. Powell the
recognizes those
honorable?
disparities
Is
and-
he a
and
judge
gives
or a
them real
knight?
weight as you make decisions that
I believe
that
it's the
will
title
likely
that
at
comes
some
with his
point result
position
in-
as
in more
chair of the
layoffs.
Federal Reserve.
Probably my last question.
But
Since
he
you
may
last
also be
testified
a
in front of this
knight.
committee, we've had 3 of the largest bank failures in U.S. history. You explored that a bit at the end of your testimony because the executives at those banks failed at Banking
What time does the
101.
meeting end?
Regulators took swift and decisive
Actually,
actions to
I think it
protect the banking
depends on how
system
many
and depositors.
senators
Thank you for
showed up
that.
to ask
That's in
questions.
stark contrast to regulators' supervisory failures in the years before the 2008 financial crisis. What actions are you taking today to prevent more bank failures and to make sure banks do
Because we
real
can't
risk management
restrict
and
corporate
address
profits in
liquidity
any meaningful
and other
way.
basic risks? And you may in part want to answer. I mean, he can do it himself, but Ranking Member Scott's comments on Vice Chair Barr and where that takes us. But what do you
That'll
do
be
to make sure
ruled
banks do real risk
unconstitutional.
management and address liquidity and other basic risks?
So I would say we are committed, and I am personally committed to learning the right lessons from what happened in Silicon Valley Bank and the other 2 failures.
I thought J. Powell
and
was a
implementing
paladin. He's not
vigorously
nearly that
implementing
honorable.
appropriately. I think there's a clear need to strengthen both supervision and regulation of banks of that size. And I can go into more specifics in the course of the hearing, but I do think we need to learn those
Jerome
lessons,
of
and
the
I think
Fed.
we've started to do that. And it's something, what we saw was an unexpected bank failure
We can through
overnight
taxation.
led to contagion
Well, we
and
can try
threatened
through
the broader
taxation,
banking system.
provided we're able
And
to
that's not
close
supposed to happen.
loopholes in
And
taxation.
we're gonna take appropriate
But
measures to reduce the
there's
chances
no
that something
tax
like that
bill
would
in the
happen.
world
Let me
that's gonna
follow
make
briefly on
its
that.
way
The
through
Fed
a
plans to propose an overhauls. We've talked about to
Republican
existing
majority
bank capital
House.
requirements. So we have a more resilient banking sector. Is increasing capital requirements
frankly,
for banks
they'd have a
with
hard
$100
time
billion
getting
or
through a
more in
majority
assets to
Democrat House,
prevent
too.
future bank failures. Is that a strategy the Fed plans to, is willing to deploy to promote financial stability?
So we have not come to there hasn't been a final proposal. There's been a proposal that's been circulated, but it's, in my understanding, it's not final, and I know things are still moving around a little bit. So I don't really have a final proposal that I can comment on. I do think that the capital increases that are getting so much notice are really on the larger banks. There may be also some capital increases in the proposal for banks down to $100 billion, but not below that.
And yesterday you said we want to, in particular, the G-SIBs, the 8 largest banks, to have high levels, very high levels of capital and liquidity. You stand by that statement?
I did, and I
corporate
said, of course, we
showing
did spend years raising
Brown.
capital and liquidity standards a great deal on those institutions, and I supported all of that. And then I concluded by saying that further increases, if they are proposed, will need to be justified. They'll, of course, as any change in rule would be.
Senator Scott.
Chairman, let's stay with the capital requirements as you and Chairman were talking about on the larger institutions, but frankly, throughout the entire banking system. Pre-financial crisis, capital levels were in the single digits. In the last decade, it seems capital is continually being raised. My question is, how much is too much, and when is enough enough? We are going down a path where something happens or something goes wrong, and the only default solution seems to be to raise the capital standards or the capital on the sidelines. And the formulas that I use are real simple formulas.
That seems like this is
higher
the
the capital
absolute stupidest way to
the lower
solve
the capital
inflation.
for the private sector.
Oh,
which
it
means
is.
fewer
And
loans
historically, too.
and less
There's
capital.
Plenty
for
of
those who are
evidence to say
actually
that raising
creating
rates is not
jobs.
a,
And
it's
so
not
when
a
we
good
have
way
too
of
much
fixing
capital
inflation.
on the sidelines, then we have too
Especially not the type
little
of inflation
capital
we
for
have right now.
actually creating
Our
and
inflation really
producing
isn't driven
a
by
vibrant
over-lending
economy.
in the
At
banking
some
sector,
point, if you've
like it was in
raised
the,
it from
in
single
the 70s
digits
and 80s.
just a decade ago during the crisis,
And, by
pre-crisis to
raising
now,
rates, you
frankly,
tighten credit.
rumors are as high as 20% for our
but
G-SIBs.
That's not really what's driving our inflation right now.
How much is too much?
I think that's exactly the right question. As you point out, there is a trade-off between making the banks safer, more secure, more resilient. You want them to be very strong, particularly the largest banks, so that they can continue to intermediate and lend money and things like that, continue to function during even stressful situations. But it's with bank capital, it's always going to be a trade-off between the availability and cost of credit and how much safety. And I think that's the question we're going to be addressing
What
and
question
answering
would
as
you
part of this
ask
process.
if you could?
As you continue to work on fighting inflation, which I think is job one of another simple formula for those of us in the real world of business, we hear a lot of celebration around the
I'd probably
jobs
ask
that are
him
being
if,
created and the wage growth, but the way I look at it is wage increase minus inflation has led to less spending
If
power.
floating rate risk on
do you disagree with
inflation
that?
swaps
No, I think that's right.
created
And so in
from
the end,
2019
as we
through
celebrate
2021
what seems to be
presented significant
a healthy
risk
economy,
for
the truth of the matter is that the average person in our
largest
nation today
banks
struggles to make their ends meet because of the inflationary
counterparty
impact
that
on
inflation
their
risk.
bottom line. And what that means for them is that there's a
And if
crisis
the reason
for a
for
single mother like
slowing
the
the
one that
pace
raised me or
of
seniors on
rate
fixed
increases
incomes.
was in
And
order
we
to
have yet
prevent
to, as a
systemic
nation,
failure.
adjust for the 500
I know the answer to
basis
that,
points
I think,
increase
but-
and how we service our debt. Said differently, the more money we have to use for servicing our debt, the less money we have for meeting the needs of the American people. Therefore, printing and spending $4 trillion after COVID was over has led to the inflation that we're seeing, and that, as a result, led to the 10 rate increases. So how do you, as chairman of the Federal Reserve, talk to policymakers about the importance of being responsible from a monetary perspective. I know I've seen and heard your comments that that's not your lane, but certainly the actions that we take here impacts, frankly, significantly what you have had to do in order to slow down Biden's absolutely explosive inflation.
Let me start by saying that actually you were talking about real wages a moment ago.
Yes.
Real wages actually did go up at the lower end of the income spectrum, and now they are
Bottom
positive,
quintile.
but they're not as positive as we'd like to see them.
Yes.
So, but to your real question, I would just say this, that the U.S. federal budget is on an unsustainable path. It has been so for a long time. We need to deal with that sooner or later, and sooner is better than later. But that's what I can say, and that's what essentially all of my predecessors have said. We are not charged with supervising fiscal policy in any way. It's just, but as a high-level matter from the standpoint of the economy, that's what I can say.
Well, here's another analogy that works for me as a former football player, a running back. If my line isn't blocking and I keep getting my head hammered, I'm going to say something to the line. At some point, I think it's your responsibility to talk about the importance of fiscal responsibility. That to the side, my last thought and question for you is that SVB suffered because their bond portfolio ended up carrying water in a negative way. You have a $8 trillion balance sheet and beyond. Every report that I've read is that your bond portfolio, our bond portfolio, the Fed, is underwater as well. Can you talk to me about the losses that you're experiencing at the Fed from a bond perspective?
Remember that the way it works at the Fed is when we buy assets during QE, we pay for them with overnight interest rate reserves. And we've, for many, many years during the QE era, we've earned a spread, and we've been sending money to the Treasury way over $1 trillion since QE started. And so now that rates have gone back up to 5%, that process has reversed. And these are paper losses. They have absolutely no effect on our ability to conduct monetary policy or really on the economy. It's an accounting fact. If we retained capital, then that would be it would look completely different. But we don't. We give all of our profits to the Treasury.
So you were giving profits to the Treasury, now you're not. That has an actual effect. I mean,
Well,
if I was getting $10 and now I'm not, there's an effect.
Well, the Treasury then will have to borrow money that it doesn't get or raise taxes. It'll have to get the money to
Correct.
carry out the spending that Congress authorizes. Yeah. But that's not going to it's not going to affect interest rates and things like that much.
To me, I have the holistic view of our economy where if, in fact, we have fewer dollars coming in, which requires us to raise taxes, that in the end has a real impact on American taxpayers. But thank you.
Thank you.
Senator Scott, Senator Menendez from New Jersey.
Thank you, Mr. Chairman. After announcing the rate hike pause last week, you said that inflation has not reacted much to the Fed's past hikes. And I'll admit I'm a bit puzzled by that statement. The Fed's first rate hike was in March of last year when non-core inflation was at 8.6%. It is now 4%.
So especially on the core
inflation
side,
has fallen as well.
It's very hard to get.
So that sounds like progress to me, especially when you consider that according to the San Francisco Federal Reserve,
you have to create
it can take more than a year for tax rate hikes to take full effect, which means that so far only 3 of the 10 rate hikes since last year are in full effect. So can you expand a bit more on that statement from last week? What progress do you expect to see that you currently aren't seeing?
To put
Sure.
the economy in a worse spot.
Of course, you're absolutely right.
faster.
Headline inflation has come down by essentially half, but that's largely due to energy prices coming down and commodity prices that go into food coming down. And those are
federal
not.
funds rate
I won't say that they're not
cause
affected at all by monetary
substantial
policy, but they're
portion of the
principally
population
affected
to lose
by
their jobs,
other
it'll
things in the economy.
create credit
The
tightening.
war in
And then
Ukraine
there's an
drove
amount
energy
of the
prices
federal
up quite a
funds
bit,
rate
and also
that's
food
truly
prices. That's
damaging
not
to
really.
corporate
Those things are
profitability
not
and
principally a
GDP.
function of monetary policy.
We
although
haven't
probably
hit
have
the
some effect at the
second leg of
margin.
that.
So we look at core inflation, and we look at how tight the
And
economy is.
when you start raising that high, you start
We
to
are
destroy
seeing progress,
wealth.
for example, in supply chains getting better. That, again, is not really a function of monetary policy. Really, where monetary policy takes effect is in the service sector, and that's where we haven't seen much progress. So, but we are seeing progress in other places, as you point out. Inflation broadly is coming down.
Am I?
But as I said in my remarks, we still have a long way to go. Inflation's still running between 4 and 5%.
So do you think that the lag period for rate hikes to affect inflation has lengthened, or are rate hikes as a monetary policy tool becoming less effective?
I don't think they're becoming less effective, but these are real questions. And the thing with lags is, this day and age, financial conditions react before we act. So the markets are already pricing in rate hikes. So that's quicker. But the effect of those financial conditions on the economy still takes time. It works very quickly on housing, for example, but less so on the service sector, which is not very interest sensitive. So I don't think that has changed. Others have a different view and different directions they think in which it's changed. There's not a consensus agreement on how long monetary policy
4380 is
takes to
picking up
affect
here.
the economy. So some people think a very long time. Some people
They've
think
moved up
right
a little
away.
bit.
So I tend to think let's look at the middle of that, and a year or
and now back
change
down.
is,
It's
that's
fluctuating.
Not a bad way to look at it, but policy actually started tightening well before that. Before
4380,
we didn't
much like
raise rates until
yesterday, is
March,
still
but
very
policy had already tightened
contested.
substantially before the first rate hike in March.
Well, I will say, I know that you have a dual mandate, you know that as well. The last jobs report shows that unemployment is starting to tick upward for women and African Americans. So I hope that
That's correct, Maeve. Thank you.
the cure is not more consequential than what we're trying to achieve.
I'll turn them down a little bit if they're loud
Recent
enough for you
reports
guys to
reported
hear.
that there's almost $1.5 trillion in commercial mortgages that will come due in the next 2 years, many of them held by small and regional lenders. With property values declining and interest rates rising, these mortgages could be serious liabilities for many banks. Do you think that we may see some banks fail as these mortgages come due? And if so, what can we do ahead of time to prevent that scenario?
So we're spending a lot of time on these issues, and we have been for quite some time. And again, I think you put your finger on it. It's really which banks have concentrations, high concentrations of real estate, and that is not seen in the large banks. It's seen in some of the smaller banks. So we've identified those banks, and there's a supervisory toolkit where we work with banks to try to help them resolve those issues by raising capital or dealing with what's happening. And of course, what is happening in the office space nationally? There's an issue with people working from home and just less demand. There's a sort of one-time adjustment going on. There are also some other pockets of commercial real estate where there's some softness. So we're working with banks to work our way through this. We're very aware and very focused on the problem.
Well, I'm concerned that it's a ticking time bomb. And let me just say that last week
Because
said
when
that
you drink out of
commercial
a
real estate
small
risks are
bottle, it
unlikely
looks
to
far
pose a systemic
classier.
risk because the loans are broadly spread and mostly held by smaller banks.
You
But
want to look like you're
how can we
sipping,
ensure
not
that
like you're
potential losses
chugging a
in
bottle of
commercial real
water.
estate don't lead to the draining of assets from smaller and mid-sized banks, and then create further consolidation in the banking sector that brings us back to, I don't want to be back to 2008 when I was here and was asked to do extraordinary things.
We certainly don't want to be there either. And so we're being pretty proactive about reaching out to these institutions and trying to help them get through these significant issues. Again, it's not all smaller banks. It's just some of them have high concentrations in real estate, and it's not in the large banks, which of course was
Yeah,
where the
they're
problem was in
referencing 2008.
and 2009.
Thank you, Mr. Chairman.
Thanks, Chairman. Senator Kennedy of Louisiana is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for being here, Mr. Chairman, and to your colleagues. Thanks to all of you for giving so much to our country. As you know, our fiscal year, our meaning the federal government's fiscal year, begins October 1. We're in the process of putting together a budget. If we pass a budget, we meaning Congress passes a budget that increases spending by, let's say, 10%, roughly $650 billion, what will be the impact on inflation?
So if it's, it depends on, of course, if it were funded by tax increases or other spending cuts, I guess in your hypothetical, it's not. It's a so I think deficit spending at the margin stimulates the economy at the margin. It's a big economy, though.
And what will be the impact on inflation?
It would probably be a small effect on inflation ultimately, but there would be an effect through stimulation of the economy. It would be more demand, which would, just in general, I'm not commenting on.
I know.
I'm sort of commenting on fiscal policy here, but nonetheless, there would be an effect on inflation.
I'm just asking you about basic economics. I just read a piece by one of your economists from the San Francisco Fed, Mr. Shapiro, who's arguing that labor costs have virtually nothing to do with service inflation and a negligible is a negligible factor in broader inflation. And I read this stuff from some of your people, and I just wonder what planet they parachuted in from. If Congress passes a budget, in my prior example, that reduces spending by 10%, roughly $650 billion, what impact will that have on inflation?
So that would, you'd have less stimulus for demand, and you'd be cutting programs if you did that, and therefore you'd be slowing the economy down.
4350 picking up
The
again.
impact would be less demand. Neither of these ideas affects the supply side at all. So
breakdown
less
here
demand
is
would
looking
mean less economic activity,
decent.
less spending, and that would have a negative effect on inflation.
Well, more stimulus by federal
starting to pick up some
spending
volume.
is inflationary. Is that right?
So we've been in this situation where inflation was so stable for 25 years, you remember, and almost nothing that we did mattered for inflation. And it's called the so-called flat Phillips curve, where there just wasn't a connection between how tight the economy is and inflation. That does not appear to be the case right now. I think people would say that the Phillips curve is now not so flat, and that there is an interaction between.
So that's a yes.
I think that's a yes. Yeah, it's
Okay.
this is the economics,
And less spending by government it means less stimulus, which tends to be disinflationary. Is that fair?
Yes. Yes.
Okay. Let me ask you about the Basel III end game. You know what I'm talking about?
I do.
There's been some reporting, and of course, not every country has to follow the Basel recommendation.
Poof.
The European Union is not following. They're going their own way, and we're kind of going our own way in America, using the Basel directives
It's
as
the legendary inverse
as
V.
a guidepost. But it's been reported that Fed's going to raise capital requirements by as much as 20%. Or, excuse me, it's going to raise capital requirements to 20%. Is that right?
No, the idea would be to raise them by 20%. In other words, if 20% of whatever current capital requirements are, you would raise it by 20% of the total existing amount.
Okay.
So,
So,
for example, 10 would go to 12.
if J.P. Morgan's capital requirement right now is, let's say 13%, it would go to 15%?
Right, something like that. If that were to be what happens.
And this will be for banks $100 billion or more?
No. There isn't a final proposal. So, and I know it's still in motion. I know things are still changing.
Yeah,
so.
but you folks are talking
I've been
about
briefed
it,
on
and
it.
you're going to have a lot of input.
No, that's right. So, but I will say, sorry, what was it? Your question was?
Are you going to raise capital requirements for 20% to
no.
banks $100 billion or more? Or are you going to affect community banks as well? Smaller
No,
banks?
the capital requirements will be very, very skewed to.
He said their name.
largest
He's going to
banks,
get
the
in
G6.
trouble.
There may be some capital increases for the other banks, and there won't. I think none of this should affect banks under 100 billion.
The really big banks you're talking about?
Yes.
Are they the ones that are at risk right now?
They weren't. They were a source of strength in a place of strength.
they're
during
doing
the
pretty
recent
well.
Turmoil. Yeah.
We've gone from too big to fail to we're damn happy they're big. I mean, haven't we?
Well, I would say that, as I mentioned, we spent a lot of time and a lot of effort raising the capital standards 10 years ago and more recently, and I supported all of that and was happy to do so. And I think
Senator Kennedy's time's expired. Senator Smith of Minnesota.
I yield
You
back.
think there's any way to
Chairman.
fix it without hurting the
As you
poor?
always do, on schedule, on time.
No?
Thank you, Mr. Chair and Ranking
Not that would
Member,
be
and,
successful.
Chair Powell, welcome back to the committee. So I have a slightly different perspective than Senator Kennedy does on this question of inflation and debt. I don't think that discretionary spending is the problem when it comes to our federal budget. If you look at it,
Like
military
there
and
are ways
non-defense
to
discretionary spending
reduce inflation
has
without
hovered at about
harming the
3%
lower
of
and middle
GDP
class.
for the last
None
30
of those
years.
will ever be used.
And in fact, discretionary
Because
spending has
it requires wealth
decreased over the last
destruction.
30 years. So clearly, that is not the problem with what's going on with our debt. It's not what's driving debt growth. The big change is in revenues. So the national debt has increased to nearly 10%.
Yeah, they'll
10% of
still. Yeah, the
GDP
Dork's right. There'd
because
still be
of the
feedback
Bush and the Trump
on
tax
the other
cuts.
end of it.
And without those tax cuts, in other words, if we'd left our tax levels at roughly what they were in the Clinton administration, which in no way restrained economic growth, the budget would only have been significantly out of balance during the Great Recession and during COVID. So, Chair Powell, I'm not going to ask you to comment on that because I know you don't like to comment on fiscal policy, but I feel that that's important context for the committee to have as we think
Taxation,
about what
quantitative
is
tightening.
driving inflation and what we are doing about it. I have been really struck by how remarkably resilient the labor market has been over the last 16 months or so, which is a good thing as we do the work we want to do to grow the middle class and create more opportunity and more financial security for people.
It could go lower.
And so rates have risen 10 times, yet unemployment is still near historic
Likely to see a
lows,
continuation
and
of the
wages
downside
are
here.
growing. Now, as you and others have pointed out, real wage growth has been clearly impacted by inflation, which is a real challenge for especially middle-class families, working families. Although I believe, as you said, Chair Powell, let me just check this, that real wage growth has ticked up in the last couple of months. Is that right? Do I have that right?
So at the beginning, it was positive real wage growth only at the bottom of the income spectrum. I believe now on a 12-month basis that overall wages are moving up faster than inflation.
Right.
Just recently.
Right. And so, I think, clearly we're not there yet. Clearly we have more work to do. I'm encouraged by the progress we've made so far. And I also just want to point out that the significant investments that we have been making in domestic manufacturing and bringing supply chains home and supporting prevailing wage jobs, I think are an important part of this success story, this economic success story, not mitigating the impact and the need to continue to bring inflation back down. So, Chair Powell, my question for you is, you said last week and you're saying today that while the labor market remains tight, you're seeing signs that labor supply and demand are falling back into sync. Do you see a path for inflation to continue slowing without us seeing significant job losses and doing harm to middle-class families, working families?
I do continue to see that path, and you're right. It is the labor market is really the strength of the economy. It's what's driving the
That
economy.
tanked quickly.
It's
They
very
pulled
strong
all the
demand for
call interest
workers,
stuff. The chain.
and workers are getting jobs, and they're
We
kind of
hit the
and
peak
they're
of it
spending
there at
money, and that's
43.80,
driving demand,
and they
the
pulled
whole
back a
thing.
lot of it.
And it's gradually cooling, and that's what we would want to see.
Mm-hmm.
So I think there is a path, and
Would sacrificing
ideally,
a billionaire to help, maybe
the
to an
means
old
by
god
which demand
like
and supply get
Poseidon?
back into alignment will involve things like the job openings rate.
I think
coming
we already
down as
tried
opposed
that.
to the
That's-
unemployment rate going up.
Mm-hmm.
Although if you look at our forecasts, we do. It's not. It's
I don't
not a
think we're going to go
desired
much
objective,
below
but we do
43.50.
expect on this path that the unemployment rate will go up.
So
a little
we
further
we
because
could
it
drop
is
more here. We can
historically
get a
low, even at
continuation of this drop,
3.7%.
but it's
until
unlikely we fall
the last
below
few years, we really haven't
43.50
seen
right
that for
now,
50 years.
unless they say something
So
like
we do think it'll come up a little bit, but
really
ideally most
outrageous.
of the loosening will come in the form of other ways.
Right. And so to the extent that we're able to pursue policies that strengthen the labor market, that contribute to the resiliency of the labor market, it seems as if that should help to mitigate the negative impacts on the labor market that rising rates would have, because in effect what rising rates do is it slows growth and potentially leads to layoffs.
So our part of it is to try to get inflation under control, and that's what we're doing. And ideally, we'll do that with with as little as possible, damage to the economy and the labor market.
Great. Thank you very much. Thank you,
Thank
Mr.
you.
Chair.
Senator Smith, Senator Tillis of North Carolina is recognized.
Thank you, Mr. Chair. Chair Powell, thank you for being here. I got a quick question. Yesterday, Governor Cook said in this committee that the Basel Endgame proposal from the vice chair, she has not had an opportunity to look at it. Now we hear reports that I think that it's 1,000 pages long, probably with a lot of technical information. How much time are the voting principals going to have to fully review and vet this proposal?
What
And is there
range
any
were those at
expectation
the
that
peak?
review would result in any changes, or is it just
You
a
mean
matter
what
of them
strikes?
either saying yes or no, they agree with Barr's recommendations?
The calls that
So,
fell off were
you know,
largely like 4380
I would
through
say
4400.
I will make sure that there's enough
Some
time
of the
for governors
43
to
like
review the final
65
proposal.
and
We've
70
been
calls took
briefed on the
profits
contents of it,
that
and
went
it's still
in
in
the money
motion.
from earlier this morning.
There will be a proposal that comes to the board for approval, and it'll be subject to discussion, and it's possible there would be further changes before the vote or as a result of the vote, but we'll make sure people have time to review it.
As you're going through the review process, do you believe that it would be appropriate to give members of this committee or members of Congress a sort of roadmap for what the recommendations entail prior to moving forward?
So I think that'll happen, I think that'll happen because I think Vice Chair Barr would probably be giving public remarks at some point before the meeting.
Yeah, no problem.
And I guess I understand now that the head of the FDIC actually gave a speech this morning. I didn't see it, but I know he gave a speech about this subject.
Can you explain why comments from Mr. Barr about having a safe and sound banking system square with a banking system that needs additional capital?
So that's the question is, of course, we spent all those years raising capital for the largest banks, and I think further increases will have to be justified, and they will be. We've always known that the Basel III endgame was going to bring some capital increases and bring a discussion about the trade-offs, and there are trade-offs between higher capital, and that's the discussion we're going to be having, and we haven't had it yet, but we will.
I watched your opening testimony in my office. Actually, Gus was there. He says hello. Chair Powell's met my office dog. But
hello back to Gus.
But
Tell him I said he was a good boy.
Mr. Chair,
I think they're talking about a person.
you got me. I'm kind of curious about Silicon Valley Bank now. Yesterday, we had an appropriate hearing and a markup on executive compensation.
Is Gus an
I voted
actual
against it
dog?
For a couple of reasons. I think we need to work on more tailoring, and I hope as it moves through, we can work in good faith to address the
Gus is their
things that would get me to a yes.
Now I want
But
J-Pow to call
another
me a
reason
good boy.
why, one
Sounds
of the
like you need
concerns I have
to
about
climb the
meeting
strata
is I
in
think we could pass an
governmental
executive comp
affairs.
bill and think that we're done with the root causes of Silicon Valley Bank. I, for one, think it was equal parts of management malpractice and supervisory malpractice. So the question I have is who in the Fed is ultimately going to give me a straight answer on what the breakdowns were in the supervisory functions, who those people were, and to the extent that we found less than adequate supervision, what's the disposition of their jobs? Who's that person?
But not too high,
I
so
ask
that he
everybody,
actually
and they say it's
respects
not in
me.
their
Yeah,
lane. So
yeah.
Who is the person that owns me? In the
Sounds
same
like it's
way
time to bail on
that we
the
mapped the CEO and various members of the bank having made
homeowners
egregious
association
decisions that they
and
should
start
have their
participating in
compensation clawed back.
more
Who can I
local
talk to
elections.
that says we've looked at the supervisory process, here were some lapses, they didn't use the optionality of 2155. We now are seeing increased reports of MRAs.
I'll
and
delete your
MRIs,
chat
so I
history
think
on the
there are
Discord.
Supervisors out there that are probably understanding Senate Bill 2155 better. But Who can answer that question for me? This comes down to a handful of human beings who are responsible for the supervisory functions of SVB.
Tough for me to say that something's not in my lane.
I prefer to run unopposed.
And I also think tough for Vice Chair Barr. So it is our lane. But I, you know, what, so if I can address what it is you're asking though, it's, I would say clearly supervisory failures. And let's not just say San Francisco, it's very much at the board. We are accountable. It's a delegated function. It's definitely at the board. The buck stops at the board on supervision, not at San Francisco Reserve Bank, although they're involved. So we need to learn the lessons and we need to implement changes. It's not just supervision though. You know, we need to fix liquidity regulation because of the speed of the it's just a different world in the old the regulation for liquidity, the LCR and the NSFR, they're just not adequate to a world where people are moving money around on their phones like that. So you know, we're doing all of that. I think we're doing it very transparently and rapidly. The piece of it that you won't be satisfied with is we in public service, people if they engage in malfeasance, if they conduct criminal behavior, if they break rules and things like that, they get fired. Nothing like that happened here. The San Francisco Fed they had identified the issues, they had notified the management team that they needed, but it just wasn't forceful enough. And that's a problem with our system, I think, and the way bank regulation is a very kind of procedural-oriented thing where you're raising things like that, and we need
Powell's
to be
fingernails
able
are
to be
way
nimble
too
and more
long.
forceful where appropriate.
He needs
Not
to
every
talk to
day
his
on every decision,
manicurist.
but on where it's appropriate. So that's what I think we're working on now.
Well, thank you. And again, thank you. You've been very accessible. I'm going to try and request a meeting after the recess sometime this summer. I would like to get back with you, and we'll be submitting questions for the record. Thank you, Mr.
Powell has
Chair.
the same watch
Santos,
I do.
I would add that I don't think that that Congress in 2155 and Barr's predecessor, Mr. Quarles, weakening the rules even more, and frankly, all of you at the Fed in those earlier days, and the Congress and the administration those earlier days, are off the hook either for Silicon Valley Bank. Senator Van Hollen of Maryland's recognized.
Thank you, Mr. Chairman, and thank you, Mr. Chairman, Chairman Powell. I just want to make sure I have a couple observations straight in looking at the most recent report, beginning with wage growth, because throughout the last couple years, we've seen rising wages. We've also seen, of course, rising prices. But it's been my observation that for lower wage workers, the people who are working paycheck to paycheck, real wages are up. In other words, the increase in their wages outpaced the increase in prices they were facing. And your latest report seems to indicate that that trend is actually even more broad-based right now. Could you speak to that?
That is right, exactly right. At the beginning of the pandemic, the wages went up a great deal for people in those public-facing service jobs that are relatively low paid because that's where the shortages were, and they got positive real wages. But that has now spread, I think, overall, on a 12-month basis, you now have wage growth by most measures that's higher than inflation. So real wages going up.
Well, that's obviously a good news story for the economy. Let me ask you about labor force participation, because we've also seen more people reentering the labor force. Obviously, that helps with inflation, wage inflation. And I understand that immigration actually has been an important part of that. Could you speak to the role of immigration in that sense?
Sure. So participation has moved up, I think, more than we had expected. It did move up last year. We were very disappointed, and then now it has moved up, and that's more people in the labor force. The other thing that's happened, though, is immigration basically went to almost zero during the pandemic, and there's been quite a strong rebound in immigration, and that's creating more people in the workforce. So we think why businesses are reporting that that labor supply and demand are getting into better balance is because of both participation and immigration.
Thank you. I'm still hearing, and I know you are, and it's still a real phenomenon, that there are huge workforce shortages, especially in healthcare, nursing, all sorts of areas, and look forward to identifying ways to deal with those issues. So just a broad question on how you approach the decisions regarding interest rates, and I very much support the decision you and your colleagues made to pause the increase in interest rates. I understand you're going to continue to monitor the situation. I understand the signaling you've already given regarding the future. But you obviously have a dual mandate. You have mandate to maximize employment. You also have a price stability mandate. But then you also have this other responsibility regarding being a prudential regulator, overseeing the banks, including Silicon Valley Bank. So my question is this: to what extent did the crash at Silicon Valley Bank, and to what extent does continuing concerns about stability in the banking area impact the decisions that you make going forward with respect to interest rates? How is that factoring in?
So there's pretty substantial research showing that when you have a shock to banking, like the one we had in March, to a sector of the banking industry, that if you come back in 6 months, you will see lower lending. And it doesn't appear immediately, but it's strong in the data. So we have been saying, we've been waiting to see that does play a part, at least in my thinking, that there may be a bit more tightening in the pipeline than there otherwise would have been. Now, we don't really see evidence of it yet, but then again, we wouldn't expect to see it. But it all points to me in the same direction. We moved very, very quickly when we had to move quickly. We've been slowing down since last December, from 75 to 50 to 25 at every meeting. And now we're getting very close. We're at least close to where we think our destination is, where we think it is. And it only makes common sense to move at a careful pace. We don't want to do more than we have to, but we do think, overwhelmingly people on the committee do think, that there's more rate hikes coming, but we want to make them at a pace that allows us to see incoming information so we make good decisions.
Thank you. Thank you.
Thanks, Chairman Holland. Senator Vance is recognized from Ohio.
Thank you, Mr. Chair, and Chairman Powell, thanks for being here. Good to see you. I want to sort of pick up on some of the questions that Senator Tillis was asking about Basel III, and in particular, some of the capital requirements and how
Morning,
they affect
ending.
The regional banking ecosystem in particular.
This thing about to dump?
And maybe
Not in
just
any
sort of start with
significant
some
way.
background on the Silicon Valley Bank situation, just to make sure we're on the same page. I suspect we agree on this, but I want to sort of make sure, and if not, have a discussion about it. So Silicon Valley Bank, I think sort of broadly agree that the reason the bank ultimately collapsed is they were way too exposed to long-term interest rate risk, because the interest rates went up. Their balance sheet deteriorated. That, of course, led to.
Is this a good window? This is the resistance on Tesla that I was waiting for.
One thing that
before
I've heard
entering a
lot of folks
put
talk
position.
about, and this is in the context of Basel III, but also in
It
other
tested it
contexts as
and
well,
bounced a little,
is the idea that we
but
need
not
to
a
increase
lot.
capital
So I'm
requirements,
kind
in
of
particular on
waiting.
some of the small and medium.
I'm kind of waiting to
banks. Of
see
course, if we adopted Basel
if
III,
it
that
begins
would
to fall
happen.
back below that
But as
256
I
level
understand it,
before considering
If
puts.
Silicon Valley Bank, let's say in the years leading up to the crisis, were exposed to higher capital requirements, isn't it plausible?
Especially
that they
because the
would
drop below the
satisfy these higher
resistance was
capital requirements
overnight
by
and then it
buying
opened above
more
it, right?
long-term treasuries.
Well, it doesn't matter what the assets were. You just have to have capital is the difference between your assets and your liabilities.
Because there's a very good
If
chance
they
a
had more
bounce could see
assets
as
of whatever
high as like
character,
260,
including
350,
treasuries, then they would have had
roughly.
more capital.
Exactly. So I just want to be clear here. If they had bought long-term treasuries, not saying they would have done that, but if they had a higher capital requirement and they bought long-term treasuries, additional long-term treasuries, that would have in fact satisfied the higher capital requirement.
In other words, treasuries could have been used.
Treasuries are capital.
So,
Right.
Well, no, they're an asset.
Sorry, treasuries are an asset.
You would have had to fund that somehow. So
But then the follow-up question is, given how poor of a job they did at hedging against the long-term interest rate risk, if they had bought more long-term treasuries, do we think their balance sheet would have been in a better or a worse shape?
they would have had a bigger loss, and more to the point, they would have still had overwhelmingly uninsured deposits
Exactly.
that were very
Yep.
runnable.
Of course. So I want to sort of, the point that I'm making, which I'm sure you can kind of understand here, is that capital requirements are not necessarily a panacea to the type of banking run that we saw in the Silicon Valley Bank case. I think there's a very good argument that higher capital requirements on Silicon Valley Bank would have made the bank run worse, or even could have made it a more catastrophic or an even quicker failure. And at the very least, I don't think they would have helped. Do you agree with that?
I think there's a lot to unpack with Silicon Valley Bank.
Of course.
The thing is, remember, it was
Head
a
and
capital
shoulders
issue.
on
They were trying to
NQ?
raise capital. That was what was going on, and the market was very focused on their portfolio losses, which were highlighted by the fact that they tried to raise capital, and so there was a capital issue there. Now, you're right.
Sure.
If you
I
filled
mean,
the capital hole
more
by-
like a failing
you have to
top,
retain
but
earnings or raise it. Or get some
I
new
guess you
equity.
could
And if you just use
find
that
a
to
head
buy
and
treasuries,
shoulders in
then, yeah, it
there.
wouldn't
Are
make
you
things
talking
better.
about like on like the 5 minute or something?
Appreciate that. So one
No. I
one
mean,
just final
not
question I have
really.
just really is about the operation of the Fed here, and we've talked about
At
this
least it's
privately. I've
not
talked
very
about
well
it with the Finance
defined.
Committee. I know the chairman shares this concern. We have a lot of mid-tier banks in the state of Ohio, and I think that mid-tier, that 3-tier banking ecosystem is really, really important. Huntington Bank in Columbus, Ohio, I believe, is the single largest SBA lender. If you look at the commercial and small business lending, a lot of it's being done by the mid-tier banks, and I feel like they're facing a lot of pressure from regulators and just in their business model, because they have seen some flight of deposits away from them and towards the larger banks. So I really worry about the potential
Interesting.
problems we're creating for these banks from both a regulatory and a business model perspective. But I wonder, Chairman Powell,
I'm
do
not
you guys
interested in
have,
concrete right
meaning at the
now.
Federal Reserve,
Maybe in a
do you
year or
guys
two.
have a standardized approach where you try to understand the capital cost of each tier of our banking system? Is that something you don't concern yourself with, or is it?
No, we definitely concern ourselves with that.
Okay.
All of us, and I'll just speak for myself, really believe that we're
Is options
lucky to
data
have
changing?
such a diverse group of institutions, from the community banks
Not
through the
dramatically,
smaller
no.
regionals, the big regionals.
I think we just have like
That's a great feature of
little
America
bump in
and our
futures
economy,
and
because
NQ.
they're just important in their own ways. So
Yes,
we try hard
caught
not
a little
to
bit of a
do
bid, but
one-size-fits-all
NQ's
thing.
Of course.
moving.
If I can, just one more final question here, Mr. Chairman. Do you have a good sense of what the capital cost is for the biggest banks, the sort of systemically important banks, versus
NQ also
the
at
mid-tier banks?
resistance
Like,
right
what is the
now.
capital cost difference, broadly speaking? Maybe we'll follow up in a written question, but I'm very curious about how you guys think about that different capital cost, because it informs a lot of the policy we make. Thank you.
I'd be happy to have that conversation.
Appreciate it.
Thanks, Senator Vance. Senator Fetterman of Pennsylvania is recognized.
Thank you, Mr. Chairman. Chairman Powell, sincerely, thank you for being here today. And first and foremost, I believe that the Fed must make sure that we have an economy that truly works for working families. I suspect you would agree. And the reality is that the tool of cooling the economy with interest hike
You were
hikes
the
can push
smartest
people
man I
out of
know.
jobs.
The second smartest man on
We want to drive
FinTwit
down
just
inflation, of
mentioned the
course, that
SOM
makes sense.
rule.
But we
Ew,
don't want to
FinTwit.
hurt working people to suffer. How do you kind of square that together? Because it's quite a paradox.
So it's working people who are the most hurt by inflation. It is a bit of a paradox. I would agree.
What's your PT for
you're living
SPX
on-
next
Quite the
week?
paradox.
At the
Exactly, you're
15
absolutely right.
minute
No, so
head and
if you're living
shoulder.
on a fixed income and you're spending every dollar on
I mean,
necessities of life,
just the
transportation,
technical
fuel,
price
food,
target?
clothing, and inflation goes
the
up,
technical-
you're in trouble
the
right
technical
away. You don't
price
have
target for a
safety
breakdown
net,
there would
not
be
a middle
like
class or upper,
4,300.
wealthier person. So it is for those people that we need to get inflation under control. It is also the case, though, that the tool that we have, and we are the organization that's charged with price stability, is to cool off demand so that demand and supply get into better alignment over time. And we of course would love to do that in the current situation with as little effect on the labor market as we can. And there's much cooling that can take off in the labor market that doesn't involve higher unemployment. However, I can't guarantee that restoring price stability wouldn't have some implications of a higher unemployment, but you have to think that restoring price stability will pay benefits to everybody, especially low and moderate income people, for decades.
Thank you. No, and I agree. It's just such a paradox because you have a dual mandate. And now we're going to kind of change the gears. There's clear that inflation over the last years have been many causes. Includes rampant corporate price gouging and monopolies. While Americans have gotten ripped off, executives and shareholders have raked in record profits. it's deeply immoral. I understand that it's not the policing price gouging and not in the Fed's direction, but you might
What
look
was
at
that
smart
word?
ways
Jurisdiction?
to fight inflation. Is it fair to say that big business have been jacking up their prices?
The
and way
big
more
businesses
than
have
their
been
costs have
jacking,
increased?
that's for sure.
Is that accurate?
So I think
All
what
over the
happens-
pores.
What happened during the pandemic was supply was constricted. Cars is a
Directory?
great example. So the
Just
demand
like-
for cars went through
he
the
just
roof
stopped
because
saying
people
it
didn't want to
halfway
take
through
public
the word.
transportation. And rates were very low.
Jesus
so
Christ,
demand
we've
was
come
just
full circle. Our
very, very
senators
high.
are fucking
and we couldn't make
illiterate.
cars. They literally, production of cars went down because there weren't enough semiconductors. I mean, I personally didn't realize that you needed a lot of semiconductors in a car, but now everybody knows that. So what happened was, how do you decide who gets the car? So the prices went up a lot. Car prices went up because when there's a lot of supply and restricted, a lot of demand and
John
restricted
Fetterman's
supply,
a stroke
you get higher
victim.
prices.
Okay.
As the economy
Fair
returns
enough.
to normal function and we have more semiconductors now, supply chains are getting better, what's happening is corporate profit margins are coming back down, as you would expect.
Do you think
And so that's just the way the economy is
you
working.
think maybe that should disqualify
so
him for
is it fair to say that you don't believe that
public
price
office?
gouging wasn't a factor?
So I think that the collision between very strong demand and limited supply was a big factor, particularly as it relates to goods inflation. It's not much of a factor as it relates to housing services inflation or services inflation, which account for about 3/4 of inflation.
Okay. All right, thank you.
Thank you.
Ceding the time back to the chairman.
Thank you, Senator Fetterman. Senator Daines of Montana is recognized.
Chairman, thank you. Mr. Powell, good to have you here this morning.
It was him or
In
Dr.
Montana, as well as
Oz?
the Mountain West, inflation
Okay,
remains
well,
about
never
5%. In fact, we're higher than any other region in the nation, whether it's gas stations, grocery stores, increasing prices, and its real-life impacts remain truly a top-of-mind and daily issue for Montanans. With inflation remaining stubbornly high, I can't help but reflect on the warning signs that were ignored by my colleagues across the aisle while they raced to push through
Brain function
trillions of
issues were
dollars in
disqualifying.
partisan
We wouldn't have a
spending
Congress.
disguised as COVID relief. And now the American people are bearing the brunt of this reckless spending. In fact, for the average American, unless you've received a nearly 16% pay raise over the past 2 years, you've effectively received a pay cut. Chair Powell, I urge you and the Fed to remain vigilant and steadfast in your effort to rein in inflation for the sake of all Americans. Unfortunately, record high inflation is not the only crisis the Fed is having to navigate. While bank regulators were more focused on climate change than actually regulating the banks under their supervision, several coastal banks collapsed and caused panic across the banking sector. Before the dust even settled, several of my colleagues across the aisle immediately began calling for increased regulations and greater capital requirements for banks, with little appreciation for the negative impacts these changes would have on small and mid-sized banks across the country. I've heard from community banks across Montana who are justifiably concerned that they will be wrongfully punished for the actions of a few poorly regulated and poorly managed banks. You mentioned several times in your testimony yesterday and again here today that the U.S. banks remain strong and well capitalized. Chair Powell, if banks are so well capitalized, why the urgency now to increase capital requirements that would really prevent another Silicon Valley Bank?
Well, let me say first that I think we don't have a final proposal to talk about yet. When we do, we'll be able to talk much more specifically about it. But for community banks and banks, any banks under $100 billion, I don't think they're going to be part of this proposal. So we're really talking about principally the very largest banks, the GSIBs, and to a lesser extent, the banks, the regionals, and then the banks between 100 and 250. And yes, the right question. The question is more capital the answer? And we'll be addressing that. We'll be making a proposal. We'll be soliciting public comment on that. I'm well aware that there's a trade-off here. More capital means more stable banks. It means stronger banks, but there's also a trade-off there. And with capital, you've got to make a judgment about where you draw that line.
Yeah, and to that point, increasing the capital requirements could in turn decrease lending. Will the impact this have on small businesses who may not be able to get a loan be taken into account before you finalize a proposal?
Yes, I mean, the thing is, stronger capital means banks will be able to continue to lend during difficult times too, right? So that's why we do it, is for those stressful times. But it is a judgment call, and there's a lot of science and arithmetic that goes into it. But ultimately, deciding how high to go is a challenging question. And we're going to be making a proposal, and I'll personally be listening carefully to the comments.
You alluded to focus more on the GSIBs and trying to spare the smaller banks, perhaps, from the impact. And I realize the proposal is still being developed, is not finally baked yet. But are you prepared to commit to sparing the smaller
nothing's
banks
going to move during these
from
meetings.
changes?
But yeah, it's
the
mostly
Fed
the
might
same.
propose on capital
Oh, the
requirements?
put interest is piled up at 43.50.
Let me say, my understanding is that the proposal doesn't affect
change
banks
that I
under
see on the
100 billion,
chain
and
is
I
a
would
little
have
bit more
serious
increased
questions as to why
interest
it
at
would. And particularly
43.40.
Most community banks, for example, in your state, are much smaller than 100 billion, and I don't know why we would be looking
pretty
at their capital.
insignificant.
They're generally quite well capitalized.
Great, thank you.
People are playing.
Let's turn to on inflation.
Calls are
back
coming
to
in
that
to
earlier
test the
statement.
upside
I
again,
appreciate
like
the wait
43.70,
and see approach
43.80.
the FMOC took
but
at its most
very
recent meeting.
moderate.
But as I noted in my remarks, inflation does remain stubbornly high, particularly in the Mountain West, and labor markets remain as tight as we've ever seen. It was noted, however, the committee is poised to continue raising rates later this year.
well
My final
endowed.
question, could you expand just a bit more on your outlook for the rest of the year and speak to
Win
your
4,300?
continued
Probably
commitment to do
not till
whatever is
next
necessary
week.
to bring inflation back
I'd
to
be
the 2%
I'd be really
target?
happy if we saw the
Yes, so
underside of the collar
I
this
think
week.
if you look at the committee's
It's a short
forecasts,
week,
and mine are
so-
very similar, we expect modest growth going
Yeah, I
forward.
know, KRE
growth
is
in
dumping.
the below the sort of longer run growth rate of the United States economy, which is around 2% or a little bit less, growth lower than that. And we expect the labor market to continue to gradually cool off. And with that, there's an expectation that inflation will continue to move down later this year. And if things happen that are sort of broadly in keeping with that, the strong majority of the committee believes that it will be appropriate to raise the federal funds rate again once or twice by the end of the year. A strong majority came down on twice between now and the end of the year. So I think the data will tell us what to do. I think the point of our meeting, the last meeting, was really to moderate the pace of our decision-making on this because, it was very important to move quickly last year, and we did. It's not so important now because we've come so far and we're relatively close, we think, to where we need to get. But we will, people should believe, and broadly speaking, the data show that they do believe, that we will do what it takes to get inflation down to 2% over time.
Thank you. Senator Hagerty from Tennessee is recognized.
Thank you, Mr. Chairman. And Chairman Powell, good to see you again. I'd like to start with something that has troubled me since our hearing yesterday regarding the Basel III Endgame proposal that's coming forward by Vice Chair Barr. The proposal is going to have far-reaching ramifications, I think. It's rumored to have over 1,000 pages in it. Yet when I asked Governor Cook about the proposal yesterday, she told me she hadn't seen it, has not reviewed it. And my understanding is that the agencies, including the Fed, are due to vote on this on the 18th of July. And given the fact, and I think Senator Warner described it aptly yesterday, the potential for a perfect storm here, if the rumors that we're hearing about capital requirement increases that may be proposed are true, this may come at a time, banks may be preparing for a capital increase at a time when we absolutely need banks to be lending, not constraining lending by raising capital requirements. So I think there are numerous analyses, the impacts on the small business community, on the banking system need to be taken into account. And I'm very concerned, particularly in light of Governor Cook's response that she had not reviewed it, hasn't seen it, and didn't seem to have any perspective on it at this point in time. It's a very short window to undertake a decision on something as complex as we may be talking about with over 1,000 pages in this report. So my question of you is, how will
4350
this
bought or
process be managed at
sold?
the Fed in terms of the decision making?
The sold puts are much further dated.
So I'll make sure that governors have enough time to carefully evaluate this. So the staff has been briefing governors, for the past few weeks about what, but the proposal is still evolving though. You're still, I'm hearing even as recently as this morning, things are moving still. So
If they have more
not
capital
possible. You say we haven't
allocated,
seen it.
won't the
We
bank
have
have more
not seen a final
collateral to
proposal.
lend with?
There isn't
Real
something to
question.
send to the committee.
No.
And I think, you can be briefed on the current state of
they're
where
talking
things are,
about
and I
like
have been
liquid
in
capital
detail, but
requirements, like
ultimately,
cash that needs to be
when you
kept
sit
on
down to
hand at
read
all
this
times.
large document, I'm going to wait for the final version to really do that.
So they're
But
really
you're
not
right
going to
to
get more
point to
collateral out of that.
the need for time to evaluate it.
Yeah, Governor Cook's response to me as she deflected yesterday just left me with a great concern. So I appreciate it. I just see no need to rush here given the significance of what's happening. And frankly, the
No,
other
they didn't
concerns you and I
spend all their
discussed in terms
cash.
of,
They're-
where we
they're
are today. I think it
changing
warrants
banking
very deep
regulation.
consideration. I'd like to turn to another item that you and I have also discussed in the past, Mr. Chairman, and that has to do with bank mergers. And if you think about a potential bank that's in distress, all things being equal, would we be better off for that bank, that distressed bank, to undertake a merger or acquisition, or would we be better off to let it enter into receivership?
The former.
Certainly, I agree with you. Yet we also, in the case of First Republic Bank, it was like a slow-moving train. Stock price had collapsed. There were actually, in my understanding, 11 different financial institutions that put forward proposals that would have, been a rescue package for the bank. Yet none went far enough to achieve an actual merger or an acquisition in that place. In fact, they let it go into receivership. And my concern is that this administration has created such a negative environment for consolidations that it's a real issue. My question of you is, do you think the current state we are, should we allow more banks to merge, especially given the stress that we're seeing in the system?
So I think there was every chance given for and much hope bestowed on the idea of having that bank sold before it went into receivership. It just they couldn't.
Thanks
they
for the
couldn't make it
TA
happen.
popcorn.
And that's unfortunate. Everyone would have loved to see that outcome rather than a receivership. No one wanted that to be the case.
I'm certainly in that camp as
Yeah.
well. My view is that there's an environment right now of uncertainty as the banking community looks at mergers and acquisitions in the guidance that the White House has given about very negative in terms of mergers and acquisitions against consolidations. I think that institutions are very reticent to move forward, and that's why I've introduced the Depositor Protection Act, which among its many provisions is going to provide a green light to well-capitalized, well-rated banks to merge with institutions that are under distress without having regulatory interference. And so as the committee moves forward, I hope that we're going to have opportunity to work on this legislation. I hope we can remove needless regulatory hurdles, and I hope we can actually encourage mergers and acquisitions that will protect taxpayers. One final point I'd like to raise with you, Mr. Chair. It's something that you identified nearly a decade ago. At that point in time, the Fed created a reverse repurchase facility that was intended to be a tool that would put a floor on interest rates. The facility was targeted at investment vehicles like money market funds, which actually play a significant role in the short-term funding markets. At that time, you joined others on the board in expressing concern about the possible unintended consequences of this facility, particularly in times of market stress. That's where this facility could actually exacerbate the so-called flight to safety. Since that time, this facility has grown to over $2 trillion worth of overnight deposits at the Fed. So I'd love for you to walk us through, if you might, the potential risks that this facility might pose, and take us through how it relates to basically pulling deposits out of the banking system at a time when we'd like to retain those deposits.
So the reverse repo facility really hasn't increased. In fact, it's shrunk in size since the events of March. So it's really not on net accounting for the decline in deposits. Really what's happening there is that market rates are higher than deposit rates, and depositors are moving their money. This happens in every cycle. I think I
May
raised
I
those.
interrupt for just a moment,
Please.
Mr. Chairman? So are my numbers incorrect that we now have $2 trillion that are parked in this facility by money market?
We had $2.5 trillion before March, so it's come down in size. In fact, now that Treasury is refilling now that the debt ceiling is solved and they're refilling the Treasury General account, the reverse repo facility has been declining, and that's what we would have hoped to see, rather than taking reserves out of the system.
Still seems
Thank
a
you, Senator
significant.
Hagerty. Senator Warner's recognized.
Well, thank you, Mr. Chairman. You know, the challenge of coming a bit late, you kind of asked my question, but Chairman, great to see you again. I'm going to at least ask a variation on my of the same question I think a number of members have asked. And, you know, I know a lot of us are sometimes get the advantage of being Monday morning quarterbacks on how you navigate through monetary policy. I think you've generally done a pretty good job. I'm very grateful that you're on a pause. I hope that pause, as the data comes through, continues. But we definitely have some stresses with that monetary policy. Secondly, you were doing what, again, I think people on both sides of the aisle have called for in terms of quantitative tightening. And again, that doesn't have the immediate effect that the monetary policy has. But as we've discussed, and I think Senator Hagerty raised, we also have, the appropriate review that Vice Chair or Barr for Supervision is doing on capital standards. And I think Senator Hagerty and my staff told me even used the term I was going to use, perfect storm of these three all coming together.
I borrowed your term from yesterday and properly acknowledged that, Senator Warner.
I'll call it very stressful situation. And I understand, I think you pointed out that my friend from Tennessee, the capital requirements will phase in, but, you could have all three of these events come together. I think you've addressed this already, but I just want to add my voice to that concern. Safety and soundness, you got a lot of jobs, safety and soundness, inflation control, and full employment. That full employment piece could be affected by this potential perfect storm. And again, I hope all of your colleagues, I raised this with the other members,
coming from on
the
RRP.
nominees for the Fed yesterday.
I mean, it's not, right?
And I
On
hope you
RRP
will,
drawdowns
again,
haven't matched Treasury
asked in the
sales.
House, you've been asked
Not even
here.
close.
I
But
don't know if you've got anything else you want to
some
add
of
to what
it
you've
has
already
come from on
responded
RRP.
on that. But
I'll just say.
I would say very
it's-
little.
You're right. We're thinking very much about that. Fortunately, it's been orderly. The shrinkage of the balance sheet has been quite orderly. There's still a very, very high level of cash reserves in the system, and we don't think they'll be scarce anytime soon. We think the refilling of the Treasury General account, people have been focused on that for a couple of months. So far, early days, that seems to be going well. We're watching it very carefully.
But again, and it's easy to sometimes sit up here and attack rather than manage all three of these, but there could be this moment in time where these factors all come together that could have a really negative effect on the economy. Let me move to something I think that's not been raised. I have huge concerns. We've all litigated back and forth causation on SVB, but one of the things that happens when you get
Do you sell the call side of the straddle
$40+
on the
billion
bump?
coming out of an institution in 6 hours.
I'm
given
out
the
of my
unit-based
straddle
loan,
entirely today.
that is, I don't know what regulatory framework.
I actually
prevents
closed
that.
that
And
short
while
leg
was
that I
glad
was
that,
carrying at
the
43.50 too.
Chair Gensler put
this
out a
morning.
commentary that's saying, we do need to take.
I've been
a look
holding on to that
on
for
more transparency on
since the
short
last
selling.
time we were at
We found in
43.50.
past short selling bars themselves don't prevent some of this. One of the things that a New York Fed official mentioned is how do we get rid of the stigma of a bank going, to the window. I mean, the thing is, rather than Fed being lender always of last resort, if we have that liquidity window, it's available. Banks are reluctant to use it, but in an era where people can move capital so quickly, having that liquidity tool available and not taking a huge amount of hits for using it would seem to me to be something that could at least take on this question of these internet-driven runs, which so far I've not heard from anybody on either sides of the aisle a really good suggestion, including I've thrown out a lot of suggestions that frankly
after upon reflection, not sure make that much sense. But this liquidity tool of using the window, the Fed discount window, is there a way to think about getting rid of the stigma? And maybe we as policymakers ought to make that point as well. But could you address that?
Well,
Mr. Chairman?
it's critically important that people be able to use and willing to use the discount window and also the bank term funding facility, other facilities that we set up, and that they aren't marked down by the markets for doing that. And so
or marked down by the regulators or the examiners.
Yeah. But the concern is that markets will see this, and so I would say the first thing is do no harm, and that is the Dodd-Frank provided disclosure of names and things like that at a quicker pace. That's one of the reasons banks don't want to do this, is they know their name's coming. Just don't. I wouldn't bring that. I think whenever you look at changing that disclosure around use of these facilities or that, you should really consider that you're going to make the stigma worse. I actually think it's good that banks have been willing to use the discount window and the new facility during this crisis, and it's almost like the stigma is a little bit less than it was. I want to think that anyway.
Thanks, sir. Senator Cortez Masto of Nevada's next. 2 Republicans in a row I called on, so Senator Britt, you will be after Senator Cortez Masto of Nevada.
Thank you, Mr. Chairman. Chairman Powell, it's great to see you again. Thank you. I'm very glad that yesterday, I think Senator Warner
did all Congress members smoke unfiltered cigarettes?
Nominees to the Federal Reserve, and one of the nominees is the first Hispanic to sit on the Federal Reserve, Dr. Adriana Kugler, who has extensive experience economically as well as including congressionally confirmed positions. I'm looking forward to supporting her confirmation as well. Let me talk to you a little bit about tougher lending standards that might be affecting inflation as interest rates increase. Yesterday, Raphael Bostic, president of the Federal Reserve Bank of Atlanta, published a blog post noting that the tightening bank lending standards we see are directly due to the Federal Reserve's higher interest rates. Do you think that the credit tightening we see from regional banks is acting as an effective substitute to an additional interest rate hike?
It may be. We've been looking for that. We actually don't see a lot of evidence of additional tightening on top of what we had already been seeing yet, but we're keeping our eyes out for that.
And so then what are some risks if the FOMC continues to raise interest rates despite seeing the impact of these rate increases already resulting in more credit tightening and higher housing costs? And we talked a little bit about this.
So the risk is that the reason we've slowed down, really since last December, we slowed from 75 to 50 basis points per meeting to 25 at every meeting. And now as we as we get closer and closer to what we believe will be our it's uncertain, but we think our destination is, we've slowed down a little further. So we're trying to avoid the mistake of going too far. And that's all it is. It's and as you can see, overwhelmingly, people on the committee do believe that it will be appropriate to raise hikes 1 or 2 additional times. A strong majority believes 2 times.
I mean, it's the discount rate plus a premium. Of course, banks are reluctant to use it.
I'm going to jump to employment, and this is something I talked about yesterday as well, because Nevada has this sort of workforce paradox. The most recent data shows that in Nevada, with both the biggest increase in job growth and the highest unemployment rate, I want to get your thoughts on.
Do you think they started to remove the reverse repo money into equities? I mean, not
paradox.
Reverse repo hasn't drawn
let
down
me give you an
that
example.
hard.
Nevada has the largest percent increase in employment, which was 4.2%. We also had the highest unemployment rate in the nation in April at 5.4%. That's 2 points above the national rate. As you consider the Federal Reserve's mandate to keep unemployment levels low, how do you consider states like Nevada where there is that paradox?
So we only have the one federal funds rate. We really can't. We have to look at the national level, although we're well aware of different labor markets and also other interesting characteristics in Nevada.
Well, and we've talked about this because the labor market,
Yeah,
particularly
the
in the service
lowest
industry,
the lowest
has been a drag.
reverse repo
And
went
we've seen that
was
in Nevada.
1.9.
And you and I have talked about this as well. Is that something you
99
consider
trillion.
as you look at
From
the
the most
numbers,
recent
particularly in
high
the
at
service industry, and what are you seeing?
2.25, so it's like
So
$250
we're seeing in
billion
service industry
dollars.
is really where
I'm
we
sure
still see
some of
labor
it
shortages.
went,
You
you
still
know,
have a very
into
high
this
level
most
number
recent
of job
like
openings
rally,
compared to the number of
right?
unemployed
Because
people.
no
And I
one's
think
going to
even
miss
in
out on
Nevada,
that.
you've got a job openings ratio.
But reverse
to
repo is already
unemployed
turning
0.4 or
back
something like
around.
that. That was unheard
Like,
of before this period of time. And that just means
Tuesday
there's
it
still
closed
tremendous
at
demand.
100
And of course, in Nevada, it would largely be in
1.989 trillion.
I would.
And then yesterday
And then
it
talk about the housing
closed
data, if you would.
at
It's another conversation we had, and how
2.037
much of a drag that
trillion.
is
Right.
on the economy
So
as well, and what
it's
you're saying.
moving back up
So
again.
you know, housing is very interest sensitive.
And the
spend.
Treasury
You know,
sold
mortgage rates are
what
are very
about
sensitive to our
800
policies,
billion so
and-
far,
and housing
and only
construction and
200
housing sales
billion
and
has
things like
come
that are very
down
sensitive
from
to
the
mortgage rates.
reverse
you
repo
saw,
facility.
You saw
So no,
housing
I
activity moved
don't
down
think
pretty
so. I don't think
significantly
we're seeing.
when we started
I don't think
raising
we're
rates.
seeing
You've
that
actually seen
yet.
it kind of hit a bottom now. We met with some with a housing group, manufacturers, housing builders yesterday, and they say business is pretty good. It's largely new entrants, though. Many people have low rate mortgages that they're not eager to get out of, and so the sort of strength you see now is new buyers coming into the market. So the market seems to be improving, but again, it's the most interest sensitive spending, or among the most interest sensitive. So it's going to be
this
affected when we
triangle
tighten
breaks
policy.
up or down.
Okay, thank you. Appreciate you being here.
Senator Britt of Alabama is recognized.
Why is
Thank you, Mr.
trade
Chairman.
flat as fuck not an
I want to
option?
start by acknowledging the strength of the U.S. banking sector. In recent events that unfolded related to SVB, Signature, and First Republic, it highlighted the significant consequences that could occur when bank execs prioritize profits over risk management, and also when banking regulators fail to do their job. Regulators left numerous red flags unaddressed, which allowed the inexcusable risk management practices at these banks to continue for as long as they did. Let's be clear, this inaction played a significant role in these banks' ultimate demise. However, the mismanagement and excessive risk-taking that occurred within these institutions are not representative of the broader banking sector. In fact, I think it's quite contrary. Banks across the board have proven to be resilient, well-capitalized, and a source of strength in the global economy. In fact, I think you see that the U.S., comprised of banks of all sizes, is the world's most dynamic banking system. I'm concerned, though, with impending actions of the Federal Reserve that in itself will be jeopardized. If you look, community banks, for instance, have served our individuals in our small and rural communities across not only my great state of Alabama, but across our entire country in ways that have allowed individuals and small businesses to actually be able to achieve the American dream and to thrive. However, over the past decade, we've seen a significant decline in the number of community banks serving Americans. The U.S. has lost 71% of total banks in the last 4 decades, and unfortunately, smaller banks have made up a large portion of this. And just in the last decade, the number of community banks dropped by nearly 40%. That is completely and totally unacceptable. When we look at the vital role that they play in each and every one of our communities, we have to make sure that that strength is maintained and not undercut. In the face of these declining numbers, the Federal Reserve is considering proposals
I don't
that
think so.
could further contribute to the decrease in small and mid-sized banks. Chair Powell, as the Fed is considering changes to the current banking regulatory framework, including stricter capital requirements that Vice Chair Barr has advocated for, how is the Federal Reserve evaluating the downstream impact of these on our smaller community banks?
So I think community banks, when we think
She's
of
a
community
senator.
banks, 10 billion and under mainly, but in assets. But I don't think under 100 billion. I don't think the proposals that are under consideration are really applying to those banks. So I
Stricter
think that
capital.
it shouldn't be a factor for smaller institutions, which, as you point out, have been declining in number for 30 years.
So what do we do to support them? From your perspective, what is the Fed doing to support community banks and rural banks, or creating conditions where they can thrive?
So there are these secular forces that are driving interstate banking, and also just population moving out of, you see rural areas that have lost half their population, things like that. So we can't do much about that. The piece of it that we understand that declining numbers of community banks is not a good thing for the country. The country isn't better off for that happening. And so we don't want to be part of the problem. And part of that can just be once fit size regulation, high fixed costs, it will make even especially small bank models unprofitable. So we very much try hard to not be part of the problem, and we do, as an institution, very much understand how important community banks are for the economy.
Can you speak to that? Can you tell me what role you believe
Treasury
community
General
banks play that maybe
closed
other institutions
620
So
at
community banks are in their
327
community,
billion.
so they know the community well, and they know the people in the community and the businesses in the community, and
relationship lenders?
it's relationship
very
lending. Yeah,
low.
it's not. I told a story yesterday, which happened to me. We were moving to Washington, and we had this big bank wanted to make the loan, and they decided not to make the loan at the last minute. I called the local community bank. The loan officer was somebody that knew my family. They knew the house. He went to my high school. He was much younger, of course. And they made the loan very quickly and they just understood it. It was going to be a great loan. We paid it off long ago. So I understand personally that they're better at doing certain things. The big banks do certain things very well, but they don't do that very well. And for smaller businesses.
Absolutely. And just want your commitment that you'll continue to take a look, whatever type of
What's an eyebrow? What are
additional
eyebrow glasses?
regulating or regulation tools that are kind of perceived to be helpful to maybe some of the bigger issues, that we take a look at how they affect downstream, how they affect small banks, mid-sized banks, and that we make sure that we create conditions where they can flourish.
Yes, you very much have my commitment on that.
Thank you so much.
Thanks, Senator Britton. Rest assured, one of the, best after yesterday, maybe not, but one of the few things that both sides feel strongly and agree on here is that that community banks play a major role in our financial system, and all of us support the
Just
community
stop
banks
acting
in our
like fucking
communities and know how
perverts.
important they are. So thank you for your comments. Senator Tester is recognized from his office.
Yeah, thank you, Chairman Brown, and thank you, Chair Powell, for being in front of the committee. I appreciate you. Look, when I talk to Montanans, I hear about what I think everybody in the committee hears about. They hear about inflation, hear about the high cost of housing, you hear about unaffordable childcare, and all these are economic conditions that impact hardworking families and small businesses and communities across my great state. And the examples are clear. Hospitals can't hire nurses. Schools can't hire teachers. And if they can hire them, there's no place to live. And even if they can find a place to live, then finding childcare is a problem, and then paying for that childcare is a problem too. Unfortunately, we haven't done much about any of those from a congressional standpoint, but I think all these challenges need to be addressed. But I'm talking to the chairman of the Fed. And so when I ask the chairman of the Fed, when we talk about these issues of inflation and housing and childcare, I know you guys think about inflation, but do you think about the other things, and do you have tools to address things like housing and childcare, or is that simply out of your purview?
We enforce some of the consumer protection laws, and so we can have an effect as it relates to fair lending and things like that. But ultimately, the bigger question is just the availability of housing and its availability near where the jobs are. There's not
What
much
about zero
that there's not really
DTs?
nothing that our tools can do. The best thing we can do for those issues is to provide an economy where we have stable prices and maximum employment.
So
You should take some notes on
there's
how he
been a lot of
relates while
talk,
not
and I'm
being
sure there's been a lot of
relatable.
questions asked
Really
on this
bump the
committee about
viewership in here.
interest rates. And
I don't know if I want those
and
viewers.
I ask this not to influence you, because I do not believe you should be influenced by political forces. The last thing we would need would be the worst thing that could happen is if the United States Senate is dictating monetary policy. We'll leave that up to the pros like you. But interest rates continued to be an issue. You are fully aware that the debt deal that was struck clawed back unspent COVID dollars. You are familiar that there are some supply chain issues in this country that have impacts on inflation, as I think the COVID money will have some impacts. And there's some other things out there that I know you're looking at.
Can we hit
So I'm going to ask you
4385?
a question that I'm sure you've been asked already, but what's going to be the key determinant as to whether you raise rates or leave them where they're at? Or I don't think dropping them would be appropriate, but what are the things you're looking at?
It's possible.
make
It'd
those kind
be
of
a bit of a slog.
Well, I would say that if we see
But
the
there's some
economy
zero
performing
DT
about
interest
as we
accumulating
expect,
today out of the
then
money. Not a lot.
2/3 of the
but a
committee
little
really
bit.
thought it would be appropriate to raise rates a couple of
43.80,
times between now and the end of the
90,
year. So what do we
4400.
expect? We expect continued modest growth. We expect, continued gradual cooling off of the labor market, gradual better alignment.
But
of supply and
4375 is still
demand.
resistance.
We expect inflation to be improving, and so if all those things happen, we think we're within a couple of rate hikes of the level we need to get to. We want to get to a level where we're confident
inferring that there's
inflation
some level
is
that the
will
market
continue to
probably
move,
4400
is moving and will continue to move down.
would be
to
as high
2%
as it
over
could
time.
go.
That's
There's really no interest above that.
level. And so that's why we've slowed down here, as we think we are.
We know full well that that's
Okay, so let's
it's like
think
a
out
soft
past that.
cap.
What
not a
factors
hard
are you
one.
going to look at that would determine a lowering in interest rates then?
So we don't see that happening anytime soon, and the test for that is that we're confident that inflation is moving back down to our 2% goal. We want to have some confidence. So, and I will say in the summary of economic projections that my participants and I filed last week, I think by the end of next year, by the end of 2024, the median participant did have some rate cuts. But that's going to depend on how the economy performs, and inflation has just consistently proven more persistent than we've expected, and that other forecasters have expected. So it's going to have to await a time when we're confident that inflation is moving down to 2%.
So I want to talk about regulation. I know it's been touched on. Katie Britt touched on it a little bit. And I know Michael Barr oversees the Fed's regulation actions. But when we passed 2155, the bill to give reg relief to small banks in particular, there was a sentence in there about tailoring, so that even if you had a community bank, a small community bank, if they had a risky portfolio, you could regulate them to match that risk. And bigger banks, the same thing. Can you tell me what Barr is thinking, or what you're advising
4350 puts picking up
when it
again.
comes to, because I think we've all agreed, the chairman just said, we want to protect community banks. They're not the problem out there. In fact, they're the ones that provide access to capital for these communities so they can grow and economy can happen. Can you tell me what your interaction is with Barr when it comes to regulation, and where you think he's going?
So broadly speaking, when regulations need to be voted on at the Board of Governors, and I'm one of the people who votes, I'm also chair of the committee. So
Jesus,
that's
Vix is
the
gonna
nature of the
fucking rip.
interaction. In terms of what you're really talking about, regulation for smaller institutions, I would say I think it's important that regulation be appropriate for an institution's size and risks. So it's not a one-size-fits-all approach to regulation, and the largest institutions need the highest capital standards and the most regulation. And as you get down to community banks,
I don't know,
the
like
regulation and supervision
within
should reflect
45
their
days
size
or
and
so.
risk.
I apologize, Mr. Chairman, for running over. Thank you, Chairman Powell.
Maybe
Thanks,
sooner.
Senator Tester. Senator Kramer of North Dakota is recognized.
Thank you, Mr. Chairman, and thank you, Chairman, for being here today. I know several of my Republican colleagues have been asking you about Basel III and the potential for some changes, obviously, in capital requirements. I'm afraid part of what they're trying to do is fix a liquidity crisis at regional banks with a capital fix, which I don't think the two necessarily go hand in hand. In fact, it seems to me, while you've been trying to engineer a soft landing, and now have taken a pause, and I'm certainly not critical of that. I can't fathom why the Fed would want to raise capital requirements when we could be facing what's a credit crunch. And I mean, does that make sense to you that in a potential credit crunch with caused somewhat by higher rates, obviously somewhat by design, that it doesn't make sense to increase capital requirements for banks and individuals?
So I think that's always the trade-off, is higher capital means more stable, stronger banks that can last through bigger crises and things like that, but it's a continuum, because that also means slightly less capital being available and higher price of capital. So, and the thing with capital requirements is the answer isn't 0 and it's not 100. You've got to find the right place. I would also say that the capital in the form of the what I've been briefed on is a proposal where the
What's
big
Basel
capital increases
III?
are really for the
Basel
largest
III is
institutions, and much less so for institutions.
a set of
not among the-
regulations
particularly
developed
the 8 G-SIBs.
by
But what's the motivation for that? I mean, you've just articulated the
BIS,
challenge, obviously,
which is the
better than
Bank
I
of
did.
International Settlements.
Why the big, for example, the big institutions? What's the situation?
It's
that would
supposed to be
require
designed to
capital
prevent
requirements?
To your point,
bank
we spent
failures
many
that create
years
systemic
raising
risk.
capital and liquidity standards for the largest institutions, and appropriately so. I supported all of that, and I'm glad that I did. I think it's been warranted, and I think that the large banks have competed very successfully with this high capital. And I think, further increases are going to be on the table. We always thought there would be some further increase at the end of Basel III globally, but I think, it's going to be on the
What does it all mean,
increases are going to need
Basil?
to be justified.
I'm going to get to another question, but you said something a little earlier that I wanted to get to.
Where can I buy negative 15p on
Senator
VIX?
Tester, is your interaction with each other?
I think the
confined
lowest
only
strike
to
on VIX is
public
10.
meetings? Is that
Not at all.
okay?
Not at all, no.
Puts are
So
worthless,
you try
by
to
the
persuade
way.
each other at the water.
In the
I
money
talk to
puts
all
on the
my
VIX
colleagues
are
a lot.
priced as if
I'm
they
not one
were
of those
out of
people
the
who can
money
just
right
sit in their
now.
office all day. I'm popping up and running around. I'm one of those people.
Yeah,
So.
I see. Okay. Well, it just because in your interaction, it sort of sounded like that, and I used to be in a 3-member, commission, not that
No,
regulated.
we have very
other things.
regular
Yeah.
meetings and conversations, right through the weekend. We talk frequently.
Okay.
Carvana's buying Root, some car insurance company.
In an
Oh,
earlier
okay, interesting.
exchange, with I think it was Senator Tillis, you talked a little bit about digital economy challenges, and you're considering some changes to reflect, how quickly individuals can move money. And I mean, I think a lot of people would maintain that while you always need to have the foundation to weather the storm, so to speak, such as SVB, you might not even have a storm, but for the fast ability for somebody to spark a run, for example, or to move money quickly. But you didn't elaborate on what kind of changes you might be considering. Do you have some personal thoughts on it, or things that you've been talking about as you're running around talking to each other?
Yes.
You think BTC
I'm
is
not the
gonna go
biggest
higher,
expert
or was
on
that
this,
it?
but so
that's two of us.
The thing that's clear is that our existing
I think
liquidity
with
requirements
all the
didn't
ETFs and stuff
assume- they
opening
didn't
up,
take into
we're probably
contemplation
likely to
at
see
all
a bunch of
the idea that you could have
speculation
a
on
run this
BTC
fast.
over the
So
next,
things are embedded in the net
at least a
stable
few more
funding
weeks,
ratio and the liquidity
but
coverage
probably
ratio
the next
that
like 6
reflect an
months.
understanding of how fast a run happens. And we now learned that
Root was a
so
pump
that's where I
stock
think
people
there
asked
is
you about last
regulatory
August. Yeah, I remember.
Response is going to be appropriate here, not just supervisory. In addition, you would have thought, and we thought, and by the way, this is every bit, the board is every bit as accountable as the San Francisco Fed on this, that supervision could have been much more forward-leaning on the liquidity issue than it was. And so we're going to address that too.
Yeah, no, great point, because these guys have heard me use my my soccer referee illustration. If you warn the offender over and over and over, but never throw up a card, they just
Is Carvana buying
worse
car
the next time.
insurance to ensure their
and
risk
so I think
on
that's a
depreciating
obvious
used
finding, and I would
cars?
concur with you. But the
Probably
whole
just
issue
as like
of
another
the run
product
itself
offering.
is also problematic, while not maybe directly jurisdictional to any one regulator. As policymakers and regulators together, we should find a better solution. But I thank you again for your service and for being here. Thank you, Mr. Chairman.
Senator Warren from Massachusetts is recognized.
Thank you,
Zero
Mr. Chairman.
GT
So in
straddle here
2010,
for
Congress
SPX?
passed Dodd-Frank to make banking regulations tougher and to avoid future bank collapses. And very soon after that, bank CEOs started lobbying for weaker rules. Now, Chair Powell, you also lobbied for weaker rules.
If we were at
When
4375, I would
first
say
nominated you as
yes,
Fed chair in
but the fact that we're
2017,
failing that
you
level, I
testified,
would say
actually, in
no.
this very room, I think, that you intended to, quote, consider appropriate ways to ease regulatory burdens.
1030
for the
spread
banks.
testing 7
And when
BPS.
I asked you if
Thanks,
there were
Zurich.
any rules
Interesting.
at all that you thought
Did
ought
you
to
see
be made
Bank
stronger,
and KRE today?
Do you remember what you said?
I think I pointed to the net stable funding ratio.
No, actually, that's not what you said. You said, honestly, Senator, I think they're tough enough. You couldn't point to anything you thought should be tougher. In 2018,
In the event we strengthened the net stable funding
well,
ratio.
in 2018, you supported Congress's weakening of those rules. You led the Fed in hacking away at one rule after another. According to the Fed's own analysis of the Silicon Valley Bank failure, you weakened the rules in multiple ways. You reduced capital requirements. You weakened liquidity risk management. You skipped out on using enhanced stress testing for banks with tens of billions of dollars in assets and more. And the result was that the second, third, and fourth largest bank failures in U.S. history, which together required $23 billion in bailout money. In fact, you now hold the record. In a single year, the FDIC has been forced to rescue more giant failed banks on your watch than any Fed chair in American history. Chair Powell, do you agree with Vice Chair Barr's conclusion that the Fed bears a big share of the responsibility for the failure of SVB?
I certainly think that our supervision has been shown to have been lax in not being assertive enough. I think that the supervisors saw the right issues but weren't forceful enough in hindsight. And I think that's certainly a fair conclusion.
Okay. So those regulations were weakened. Those supervisors were clearly asleep at the switch for more than 5 years under your watch. And I'll just say it again. This is exactly why I opposed your nomination in 2017. The decisions that you made, the votes that you took, and the things that you said helped caused this mess. And when you were up for reappointment in 2021, I opposed your confirmation because I believed that your continued leadership would be dangerous to our financial system. And the Fed's own report confirms that. So yesterday, Chair Powell, this committee voted on a bill to help hold CEOs accountable when their actions blow up banks. At the Fed, you are the one who lobbied, who drafted, and who voted for weaker rules, and you were ultimately responsible for the team of Fed supervisors who fell down on the job. Do you take responsibility for your role in these bank failures?
Hey, guys, a lot of you guys don't like Elizabeth Warren, but
From
she's
the bank failures, and the main responsibility I take is to
She's a
learn the
very
right
good
lessons
lawyer.
from this and to undertake to address them, so we don't have a situation like this where we had unexpectedly a large bank fail and spread contagion into the banking system. That's not supposed to happen, and we need to take appropriate steps to make sure it doesn't happen again.
So I just want to make sure I understand what you mean when you say you take responsibility. Do you take responsibility for your actions that led to the failures of these banks?
Yeah, I think the question of what happened, supervision was at fault. That's both at the board and at the reserve banks.
And are you ultimately responsible for those supervisors? Are you
Actually,
in charge here?
under the law, the vice chair for supervision has
Okay, so you
has
take
sole
no
authority.
responsibility
I didn't
on
say
that.
that.
Well, that's what I'm trying to ask. I'm trying to
what I said.
understand what you take responsibility
I
for.
take responsibility for addressing the situation appropriately.
That's talking about
that's
going
my focus.
forward.
That's my focus. It's going forward.
Yeah, well, that kind of sounds like not taking responsibility for what you've done in the past. You know, a month ago, we had the CEOs of the banks that exploded in here, and each of them had scooped up huge bonuses, and each of them said they plan to keep every penny of that money. And now we have the chair of the Federal Reserve who led the charge to weaken bank regulations, who oversaw.
I mean,
the
I
bank
haven't fact checked
supervisors who
her,
failed
but
miserably
so
to
far
hold these
everything she
banks to
said's
line.
been
And
true.
again, the accountability is zero. Our banking system is broken. $23 billion in bailout money, and there is no accountability for those at the top. And once again, the people who didn't cause the mess are forced to clean it up. We need significant changes.
Is she slandering
Mr.
J-Pow?
Chairman, I yield.
I mean, a lot of the reason
There are two
J-Pow is so
senators that might be
popular,
online.
right, is
Senator
because he
Sinema
created
is recognized from Arizona if she's online.
two extremely
If not,
persistent bull
Senator Warnock
markets
from Georgia,
on the
if
back
she's
of
online.
QE.
Okay, we'll close the hearing
He's
today.
he's
We have
he's
come
not
together
without
to
his
discuss how the
faults.
economy ought to be. I don't believe that to have a strong economy we must trade American jobs for corporate profits, nor do I believe we must sacrifice a safe and resilient banking system for easy money for the biggest banks. We can fight inflation and protect worker gains by investing in growth right here at home and building a more inclusive economy. Thank you for joining us, Chair Powell, today. I look forward to working with you to strengthen our economy. For senators who wish to submit questions, they're due 1 week from today, Thursday,
I was talking about
June
2019
29th.
and
For Chair Powell,
2020.
please
Well,
respond to
2016 through
questions, for the
2019
record,
and
45 days
2020
from the day you receive
through
them. Senator Scott has
2021.
Some comments he'd like to make.
Thank you, Mr. Chairman. Just to be quick, one of the comments that I heard during the hearing was that somehow tax cuts led to the challenges that we're facing
Ironically,
with our
if this
debt.
persists as a
Just
bull
wanted to
market,
clarify the
he
record
had
that
no intention of
revenue in
creating it.
2022 was $4.9 trillion, more than 30%.
If you aren't a
higher
FinTwit
than
stock trader, then money
2017
printer go
revenue of
burr isn't the
$3.32
greatest thing.
trillion.
Yeah.
One of the things we should just recognize as a clear fact is
If you can't
if
play
your
the greater
revenue
fool
goes up,
game.
and that's what happened after the TCJA in 2018 and 2019, we had an increase in revenue, not a decrease in revenue. Unfortunately, we had an increase in spending that exceeded the increase in revenue. So if you spend more money than you take in, you still end up with a deficit.
Thank you. And of course, Senator Scott recognizes that we had a pandemic. The committee is adjourned.
All right. Well, not too much different. I mean, most of the senators still focused on fucking banks freaking out about Basel III regulation. Yeah, God forbid we had stability in our financial system that might reduce the amount of risk they can take in the markets. Fucking Europeans ruining everything. The circus is adjourned, yeah. God, I greatly dislike my senators. Senator Scott recognizes we had a pandemic. Meeting adjourned. I mean, I'll give Elizabeth Warren this. She was the only one that didn't bitch about increased capital requirements. It's like, how could you do this to our healthy banking system? Do you take any responsibility for the bank failures? J-Pow, shut the fuck up. I'm CEO of SPY. Fuck your puts. Fuck your calls. Warren's got a pretty stable base of what, Massachusetts, of socially liberal Democrats. So funding isn't so important for her. She also might be the only person up there that understands the monetary system. But I've seen her draw some conclusions that were not accurate in the past. I would say that none of them really understand the monetary system or their responsibility over fiscal policy at all, which is fucking frightening. And that goes for Congress and the Senate both. Wasn't there a senator last time that wanted less scrutiny for smaller banks right before the bank failures? All of them. That was like the running. That's why I wanted to make sure we watched these, because that was the running theme across the last two testimonies between the House and the Senate, was that why are you looking into these regional banks? We don't need to look at regional banks. Regional banks are fine. I don't think regional banks need the increased scrutiny. They're trying to support our small businesses and keep millions of Americans employed. And then, you know, like 5 days later, 5 of them failed. And now this time it's why are you trying to raise capital requirements on our big banks? Now you're trying to fuck up our big banks? I mean, yeah, I don't. Mostly just because she's wrong about the way interest rates work. But I mean, at this point in the hike cycle, it would serve the Fed far more to increase quantitative tightening rather than increase rates, right? Like, hold the rate, sure, but I mean, crunching credit's not really having the desired effect. If corporations can just milk the consumer for the additional capital, then they don't need to worry about, you know, funding future growth. You mean start quantitative tightening? Well, they did for a little bit. I mean, we're back at the level prior to the bank failure. Close. Well, I think just a little above it still, but close, and mostly just a little above it because the TGA is refilling and increasing their deposits on reserve, right? They haven't sold a single instrument, just letting them roll off. I mean, they did some open market closures. But yeah, they haven't fucking shed any MBS, or the banks are dropping MBS like crazy. Did you see the chart I sent Dork? Banks have been unloading MBS for like the last 3 months now at a pretty rapid rate. I mean, far faster than they have at any time since like 2008. Where do you see a bounce here? I don't know. We'll get a little bit more flexibility now in price action now that the hearings are over. I think there's still another Fed speaker today. At least one. Let's see. We're through all of that. 8-week bill auction came in. 5.14. 4-week came in flat. 15-year mortgage down. 30-year mortgage down a little. Tips auction at 1 o'clock. Barkin speaking at 4:30. Okay, so yeah, no more Fed speakers today. We should get a little bit more flexibility in price action now. Nothing too shocking was said, but banking worries I think are still pretty stressed. It looks like 4350 puts are increasing. Puts across the chain are increasing, but particularly at the 4350 strike. I think this looks like it's breaking down. Let's see if we find a little bit of stability here. I'd say the upside of our range is probably still at like 4370. It doesn't look like we have very good momentum to the upside. And ES has failed twice at the 4415 resistance. NQ, though, which seems to be driving a lot of the price action today, at least the upside price action, is still pretty stable on its uptrend. You need to see NQ probably fail back below 15,050. So I'd be watching those two levels, 4,400 on ES, 15,050 on NQ. If NQ fails into the rest of the day, once the neutral positioning starts to break down, that'll be really bad for SPY, because there's decent put interest to the downside. How do I buy MBS? It sounds like a great investment. Any recent and relevant Express news one might have missed? I don't think so. What was the last thing that you saw on Express? NQ is NASDAQ futures. I know. Oh, you're telling that guy. Earnings? I don't think there's been any significant news beyond that. Let's see. I know that you know about the reverse split. I think the reverse split was announced with earnings, but maybe not. There's likely to be a reverse split. Is it fair to say that during these meetings there's usually some type of pump with an immediate sell-off afterwards? There's usually a closing of neutral positioning, right? So you get kind of, well, it doesn't have to be a pump, but you usually get like that, or the inverse of that, as the long and short side of delta neutral positioning closes out. Because they always present the off chance of increasing volatility, right? Everybody's watching, and so if anything is said in the testimony, and it's happened in the past, that is, I hate to think about the market this way, but in this instance, it's true. If anything's that's said that isn't priced in, right? People are hedging that possibility, and then you see those positions peeled back, and you start to see more movement pick up in the indexes, generally going after the meeting, right? And so as those positions are peeled back, you get a lot of up and down volatility. It's very similar to like when we have like FOMC meetings. We'll spike, we'll tank, we'll spike again. You think Oxy hits your conditional buy today? Oh, I have no idea. Oh, it's pretty close. Maybe. Yeah, oil got fucking obliterated today. Ooh, that might be a good entry on ZOM. Hold on. I need to check that out. A little better this morning. Damn it. No problem, Ken. What stock are you talking about right now? Oh, with the reverse split? Express? EXPR? It might be a good day to sell a couple Oxy CSPs. Maybe. I don't know. The volatility is kind of low. They're really not that great of a yield. Although after this buy-in, I'm done buying into Oxy, so I'm putting like another what is it, like 16,000, a little more. And then I'm not buying any for a while. What's your Oxy basis? Unadjusted, it's like 57-ish. I think with covered calls, like adjusted for covered calls, it's probably around like 51 or 52. My initial cost basis was a lot lower, actually, but I've averaged up a lot. When will you unban me? I don't know. Frankly, I didn't remember. Don't unban anyone. Why? Yeah. Because they'll just do things to get rebanned or act annoyingly. I know. Almost everybody that I've ever banned and then unbanned, I've regretted it. But you like the conflict? I do. Yeah, you're not wrong. Walk-in's banned until the market crashes. There's like a pretty firm set of rules on that. Make a new tag for them called Thin Ice. That's weird. I'm not doing that. Gherk, you're in the Dumb Money movie trailer? Am I? Or is it just Seth Rogen and you're making an awful joke about a person I hate? Lawsuit time? That's what I was thinking. August VIX 14C, 15C, enough theta to capture potential. I'm thinking of going 14 to 18 on the strikes. Thoughts? It's like roughly 60 DTE, right? I wouldn't go. The further out of the money ones, I'm not a big fan of. You know, VIX calls are massively overpriced right now, right? I hope you understand that. Like, buying them at this point is kind of a shitty deal. Do you have you played by Cartman from South Park? I think I saw a picture of that. When Upstart CSPs? I don't know. I'm not buying Upstart at these prices. It's ridiculous. I would seriously consider other methods of exposing myself to volatility on the long side besides VIX calls. Like, if you didn't get them last week when the skew was, or last week or the week before when the skew was not as bad, they're really kind of a terrible purchase now. The skew on them's super fucked up. VIX puts, like in the money puts, or have like 0.17 delta, or 0.07. I'm sorry, 0.07 delta in the money. Like $14 puts have 0.07 delta. That's so fucking fucked. I know. What's up, Tankerific? We're gonna see one of your peak entry plays at the final hour of the day again. Maybe. I really don't like getting into any zero DTs at this level. It's too unpredictable. Like, it's probably going to continue down. Call interest is falling off and put interest is picking up, but not enough yet to be certain. Actually, you know what? I'd probably buy zero DTs if we get like a stop loss hunt here with a little volume, like puts. But I just buy them like at the money, like 43.65 or something. If we test 43.70, yeah, I'd probably want to see 43.70, maybe 43.72. Then I might consider 43.65 puts. Okay, JPOW done. Anything gonna happen now? Any OI movement happening? Yeah, I feel like I just went over that. Zuckerberg agrees to cage fight with Elon Musk. All right. So what's driving the market up or keeping it steady today? Well, I mean, the delta neutral positioning hasn't exited yet. I wouldn't say we're being driven up. We bounced off gamma neutral. Well, the fast gamma, right? But that's just closing of shorter dated puts that were in the money. I don't think we haven't seen any like recovery today though. Do you know when that skew change happened? It was like after last Friday. Or into last Friday, actually, going into the expiration. Sight set on another GME no packs. Yay. I told you nothing was gonna fucking happen when you asked me last week. I said GME's already liquid. It's not gonna rip. There's also a fucking holiday this week. Are you currently holding any VIX positions? If so, what dates? I have August 18 15s, and then I have September 15, 10, 11, and 12s. But those are like portfolio hedging. Those aren't like long positions. So just August 15 on the long side, and not a ton. I played a bounce on VIX like last week, but that was all shorter, or the week before last, but that was all like shorter dated shit. Most of my exposure to long vol is via SPX. It's better. It's better exposure. It's also cheaper. Well, that disincentivize calls and puts on VIX. One is overpriced and one is underpriced. I mean, they're cash settled. There's probably an arbitrage opportunity there, although not with VIX futures, because VIX futures are higher than spot VIX. Elon Musk plus 140. Zuckerberg negative 160. Which side would you take with $200? Have you seen Musk partially undressed? The man has the body consistency of a bowl of pudding. Zuckerberg's a psychopath who takes Brazilian jiu-jitsu. Zuck could definitely kick his ass. He's a robot. I mean, it's not even a competition. Elon takes the shape of his container. Bezos would fuck everybody up. Just cover him in olive oil. He'd be impossible to fight. I don't know who wins the fight. All I know is somehow Zuck walks out pregnant. He doesn't walk out, he rides out on his new mini horse. Greased up rich guy. Have you guys ever thought for a second that and I had this thought the other day, what if every cringy shit post on every social media platform, 4chan, Reddit, Twitter, you name it, was just Musk? What if he's the only person who's really like that? That he's just hired a team of people to spread his propaganda. That would be amazing, but unlikely. The composite man of trolls. It couldn't be, right? But could it be? Like, what if like incels don't actually exist and it's all just Musk? Yeah, exactly. Why else would he buy Twitter? Maybe Twitter was blocking his accounts. AI feedback loop. It's impossible. You'd have to have 5 different handles in this chat and control them simultaneously. What's up, Kirk? How's positioning looking for the rest of the day? Boring? There's put interest at 43.50, but we haven't fallen enough in order to gain any momentum. And now I have these fucking 43.65 puts. God damn it. Why did I buy these? All I'm saying is that he's rich enough to make it happen. And here's the thing. Here's the kicker, though. He's the kind of person that would spend money to do that, right? Like, nobody in here is like, that's not something Musk would do. Because we all know that he would. That would be an idea that went through his head. How long can tail risk and the MM buying against the 0 DTE bulls go on? This is ridiculous. They just show up every day with more capital. Where are they? You're acting like we've ripped like 50 basis points today or something. We're like basically flat. King of the incels, I'd buy. The only one, I can't get my head around that. Well, no, I mean, like, obviously, but all of the posting began with him, right? Like, the idea would be that he has created the entire narrative for the community, right? Not just incels. I can think of like 10 other communities. I miss Charmadillo. Sorry. Charmadillo is hibernating till October or July 21st. I've personally impersonated 4 people at once and hacking CTF to get info from a competing team. Nice. Did you catfish them? Elon Musk could pay 30,000 people $60,000 a year to troll on the internet and still retain half his net worth. Or he could buy Twitter and lose half his net worth. Guess which one he picked? Can Dumpadillo come out and play? I suppose. Ooh, this is my chance. Hmm. Is that bullish? No, right? Okay, that's gross. That's also pretty gross. That I don't know about. Interesting. So... Head and shoulders on NQ. Big downs incoming. It's really not. Would everyone stop trying to make the head and shoulders a thing today? What's with that? If it was a head and shoulders, it already have completed and bounced. Interesting, Tanarchy. JPM mistakenly deleted 47 million records. Nice. What convenient timing. What worries me is that the Bears had every chance to slaughter the price the last 2 days and didn't. No, they didn't. Everyone's taking fucking neutral positioning around the Fed testimony, right? So there wasn't really any opportunity to slaughter the price. There is now. Replace one of your VIX charts with Upstart. Fine. Yep. Thank you, Brett. Welcome to Cornichon for Fabrizio. Amazon is getting the AI pump now. Why? What did they say? Oh, that's not that impressive. Will you replace your Upstart chart with the second VIX? Yeah, only a few tens of billions of market cap for no fucking reason. Well, this is not hundreds of billions, right? Are you bullish or bearish as fuck? I am bearish, but I have many levels of confirmation before I'm bearish as fuck. When in doubt, zoom out. Do you still believe that comedian killed his wife? Patton Oswalt? Yeah, absolutely. Do you still deny that Dave Grohl is innocent? Yes. I'm sorry, Doric. I'm never going to change my mind on that. The motive is there. Foo Fighters wouldn't even exist if Kurt Cobain was still alive. Nobody would know who the fuck Dave Grohl was. Do you have the SNR for Amazon after the recent breakout during this meeting? No, but I could go look at it. So it's currently trading 129. There's resistance at 132. That's not there. It's there. Or 131.50. Yeah. 131.50 is the next upside resistance. You ever heard the Grohl thing before? It was a joke. Kurt Cobain was definitely killed by Courtney. Patio? I still think you should name your cat Courtney. No. Oh. Matt with 2 T's. Welcome back. Patton Oswalt is an avid ornithologist, and long story short, he gave his wife a boutique hand-woven straw bed. All the birds in the sanctuary fought to lay eggs in there, and the melee his wife passed. What the fuck are you talking about? Are we just gonna grind until end of week? That's very possible, yeah. Scooby-Doo, welcome to Dillionaire. Thank you so much, man. Hit me up on the Discord, and I'll get you added to the country club after the stream. When was Upsquart's all-time low? Back in, like, December, right? Just like search the Discord for I can't believe I bought this piece of shit in the Upstart channel, and that should help you identify the all-time lows. I'm not losing it. I only have like 3 conspiracy theories. That's not conspiracy. We have footage of the BirdBot's internal cameras. Can we fast forward to the part where everyone is underwater on their Upstart shares and can't understand why SPX won't stop falling? That'd be cool. I love how nobody ever has like at the money puts. It's always like, Girk, why isn't the market dropping? I have puts at 3,200 and they're not printing. Too expensive? Buy less of them? Kirk, my SPY 385s aren't printing. What gives? One is too expensive. Play a different instrument. Planning to open a BTU position. What is a good price target at this point? Is it likely to go back to 20 or just stops? It could fall back below 20. It's not impossible. Although commodities have been heating up a little bit, so it kind of rallied out of the dip. I always shave out the money puts and calls. I just don't want to flood you on stream with my positions. Thanks, Renzor. I did buy my puts at the money, but they are now out of the money. Shouldn't you have closed them? Like, let me explain something to people, because maybe it's just a lack of understanding. So SPY's like SPX is trading at like 42.50, right? And it hits resistance, and you buy a put, and you're like, okay, I'm gonna buy a 4,200 with 30 DTE, and then it rallies and it goes up to 42.75. I'm going to test that resistance and starts to push up more. My question to people is, why do you own this still? Theta, you've kind of moved a bit far away, right? But then it gets worse, right? Then it goes up to 44 fucking 50. And people are like, this put's totally fucked. No shit, Sherlock. But you only have 30 fucking days. It's not like it's like a leap. Here's the answer. When this happens, you should probably buy a call, right? When this happens, you should probably close that fucking put. You should not still be holding the motherfucker all the way up here 20 days later and bemoaning the fate of your fucking options contract. It's an options contract. Either the bitch prints or it doesn't. Close the motherfucker, right? Take the $100 loss instead of the 5,000 or 10,000 or whatever the fucking amount you guys are gambling. Because, you know, if you spend $10,000 on puts here and then you close them out at, you know, a $9,000 at $9,000, so $1,000 loss, right? You can reinvest $9,000 into something else that works, right? Don't take your $10,000 investment, wait till it's worth $4 and then close it out right before the market drops. And we've been doing this for 2 fucking years now. Get your shit together, all right? Don't come in here asking me stupid shit like, oh, when are we going to test the JPM color? How little theta can I buy on this put and still have it print? Fuck you. Buy one good fucking position and manage it. If you're down 50% on your option, you fucked up. If you're down 50%, you've got no fucking hedge. You haven't closed the goddamn thing. What in the actual fuck are you doing? Thanks, Milkman. I don't have $10,000. That's why I'm diamond handing my underwater puts. The lessons learned on games, like, this isn't GameStop anymore, right? Those days are gone. You can't just hold underwater calls for weeks and then they'll go up 10x, right? Set risk. Manage the risk. Don't you know, over leverage because you're hyped on something. There'll be a million more things to be hyped about, right? The market could crash tomorrow. You could not own a single put, right? And you can still make money off that. You can buy the bottom, which is arguably better than shorting the top. You don't have to be exposed to everything. You definitely don't need to be fucking overexposed to everything. Is there like a SPZ that's cheaper than SPY, which is cheaper than SPX? You can play, what are they, micros? Which are like little E-minis. Like an even smaller. The problem with the discount index is that you're losing, you lose some money playing them because of their illiquidity and their spreads. Yeah, there's XSP Nano. The best part is the only people that are listening to this advice are the ones who need it the least. I know. I try, though. I try to get it across. So 10%. I mean, you determine your risk. I don't know the size of your account. There's no hard and fast rule to how much risk you can take, but you should manage how much risk you take. I used to suffer from the same mentality with puts. A lot of times people are looking for the rug pull. That's why the overholding. Yeah, I know. I'm legally blind and use a Braille keyboard. Unfortunately, my screen is not in Braille, so it's difficult for me to both sell options I buy and difficult not to tag Pyrex77. P.S. Fuck Pyrex77. Thanks for the tough love, because everyone here needs it. Lawrence, I know it's you. You're the only person with an outstanding campaign against Pyrex77. Thanks to the rant, learning not to hold for MOASS with every trade has been the hardest lesson personally. Think about it this way. Maybe this will help people manage this better. If you're a complete idiot, right? Let's use someone like J-Roll. Let's use J-Roll as an example, right? You just trade off technicals that you don't really understand. If you have 2% risk on a 10% allocation over 10 trades, right? And a 10% take profit, you only need one win for 9 losses. And over time, you'll be up. And if you're trading options, you don't even need to bet on the direction of the price. You can place you can take positions that just profit off the price doing anything. You can take positions that profit off the price doing nothing. Right? Like, you don't even have to be good. You just need to manage risk. If you can manage risk, you'll make money. Sell theta and windmill your danglies. That's why I leverage my leverage with leverage, so I can leverage the leverage with leverage. Exactly. I didn't get it. Jesus Christ. What's the point of risk if you manage it? Then it's not risk, it's lame. Do it again with 100% capital allocation into one play every time. Oh, fucking Christ. Are 4350s mostly sold puts? Not on the 0 DTE side. Momentum and volume are starting to pick up. ES looks like it's about to sell off. NQ also looks like it's failing. Slowly, but it'll probably pick up steam. They're definitely nearing the end of their consolidation. %2 risk on options contracts would mean you're almost guaranteed to stop out every time. With swing trading, you often have to hold underwater positions, considering theta, of course. I'm aware of that. It was an example. And it depends on how much theta you have on the position, right? If you're holding underwater for a very extended period of time, maybe you were just too early, right? If you have more money, you can take more risk. But swing trading is not exactly desirable for the less capitalized, because you do have to suffer through significant periods of drawdown. I just want to be able to put a stop on my fucking 4365s. That's all I care about right now, Cobra. Is now not such a good time to sell a bit in the money GME CC due to its stagnant price recently, or liquidity realization has done and down to below 20 soon? I mean, liquidity is like the liquidity realization already happened. So, I mean, GME is currently pretty liquid. I mean, if the market drops and there's more active fund selling, it'll get more liquidity and it'll fall further. I wouldn't sell deep in the money covered calls because you need a continuous downturn in the market, which obviously isn't guaranteed. So if we go below 43.50, sold puts drag us down. 43.20, JPM selling futures pulls us down. Well, no, it doesn't really pull us down. It's just a constant driver, right? You know, if JPM, if we're above the JPM collar and they're buying futures on the way up, they're selling futures on the way down. So this is constant over time. It's not like we hit the collar and they dump them. Are FUBO ETF FTDs worth hedging? I might plant some saplings rather than do a full trim and lay. Are you using gardening terminology with me? They could be. It's just kind of a gamble. Like you don't know if they're going to be relevant or not. I called my local express store at the Woodfield Mall, and they had no idea when the stock was going to reverse split. So I can sell covered calls. Oh, Jesus. Exact same position with my SPY 434s. I'm positioned really well, but I don't want to set a stop yet. Yesterday I set too early and cost myself a lot of profit. Hold on. I'm making money. You can just buy them again if you get stopped out early, right? Especially if you're trading on shorter time frames. This is very, very important to have strict stop losses on short time frames, because the contracts can drop in value so fucking quickly, right? No, I hadn't set a stop on the 4365s yet. I just set one. Generally speaking, on like SPX 0 DTEs, I won't set a stop until they're in the money or, well, profitable. And then I'll move the stop up. Did someone sell a block of 666,666 SPY shares? Possible? Can you replace GME with QQQ? I can replace Upstart with QQQ. Because they're basically going to track. Now I'm stopped out of the 4365s. Let me see. My short on Turkey is doing all right. It's not up a ton. If they peg their currency to the dollar, I'm gonna make so much fucking money. Oh, today was their rate decision that we talked about yesterday. Me too, 30% ups. Nice. Why didn't JPOW release a live bear in the Congress Hall during his testimony? Something I learned is not to overhold, especially 0 DTEs. When you're profitable and the momentum stops into your direction, you should sell quickly. Yeah. Because other people will, right? And then like here, for instance, if you think this is going to realize continued downside, you know, which it very well could, at least from the technical pattern, looks like it's going to continue down after that little bounce. You know, you would just re-enter a position here, right? and then catch the next leg, especially if you're day trading, just in and out, in and out, not in and hold. I just learned to overhold during frags, and now I'm just a permanent overholder. I think you just like to bury your options in the backyard. For longer dated SPX puts, say 11 DTE, when do you set a stop? My strike is 43.70. Do you have a target in mind? I mean, I'd probably have a stop in place above 20% profitability. You're carrying the position overnight though, I assume. So you're taking a lot of risk anyway, right? Berry? No, they taste good when burnt to a crisp and dipped in spicy mayo. All right. My issue with overholding puts is we've been staring at a cliff edge since like May, but there's always time to buy back in. I know I need to adjust risk management, but that's been hard to deal with. Yeah, I understand that. But then you need to hedge, right? If you're going to hold, if you're going to like go long short, then you need to actively manage that position. You need to be selling, you need to be selling theta against your long put, right? Until it has some kind of realization. You should be hedging any upside moves that, are going to reduce the delta on your position. You need to actively manage a position that you're going to hold for a long period of time. She hold theta against my long put until I realize? Huh? Is that like a lyric? Hedging is for losers. Stops are for quitters. Negative 80% on QQQ puts is for true market aficionados. Is this accurate? 2% risk on day trades? If you're trading stock, you can't do 2% on intraday like options trades. You can, right? And you'll basically just stop out at any moment that you're not 100% correct, right? And to trade like that intraday, it's rough because you'll get stopped out of good positioning, right? If you're trading intraday options, you need to adjust your risk. You have to take on more risk because you're taking on more leverage, right? But if you're trading shares, which more people should probably be doing, but I'm not going to get into that. But if you're trading shares, yeah, 2%'s more than sufficient. Some people cut it as low as like 1.5 and 1%. The move has to go quickly in your direction with 2%. Yeah, it does. You have to buy you have to buy within a candle of price action. Please do get into that. I don't have that problem. I'm always 100% correct because I ghost your plays. Did anybody get the Netflix Pickles pick this week? That thing did better than I expected. Holy shit. Netflix now sub 420. My 630 SPY 437p. Do you think it would be better to roll 712 today or tomorrow? It's in the money, so less theta decay, but today is 7 DTE. 630, 437p. You're not very in the money. If you stay in the money over, I don't love the level, but if you stay in the money overnight, you're fine. You don't need to roll it, but you could. It gives you a little more breathing room. You could also take profits and reposition at another strike for that date. And then you'll have taken some of your initial risk off the table, right? Yeah, I do. Bear flag? Yeah. Breaking down, though. If you're doing 2-1 put call straddle overnight, would you buy more theta on the call? Given this week market drop overnight is more likely, so when the call is out of the money in the morning, you can buy back with less loss of theta. Yeah, but if you're doing if you're doing a straddle, it doesn't really matter, right? You'll get less loss in theta. But you're gonna overpay a little bit to have that extra comfort. The only reason I would get more theta there is I intended to hold it, right? And I probably wouldn't do that right now. Like we had a very, very big move up, right? And the range of correction is probably going to take us out of the range that we're currently trading in. So I probably would, like, I've been spending less on the call side recently. And the discount you're offering yourself by going 2-to-1, I mean, you're kind of already, you'd be eating into that by buying even more theta. You really just want to make sure that your overnight theta decay isn't damaging to the position, right? Like, if SPX were to open where it closed, right? You don't want to lose a shitload of money. So, and you start to buy them too far out and they become less profitable. So you start buying like 21, 30 DTE, right? They start to lose a lot of the profitability. Because you're paying for so much theta up front, right? And then you need to wait on much bigger moves. You have to hold the straddle longer. The sweet spot there is really between like 5 and 11 DTE. There are reasons to go above, and there's a few reasons where you can go below, but rarely. Also, volatility is still really low, and realized volatility is still really high. So if we were to turn around and go up, right, the potential for upside's already pretty great. You don't need a lot of theta to realize it. I've been buying a lot of theta on the put side because we've been going up, right? And so I want to be able to hold those dead legs beyond the peak. Will there be negative charm for end of quarter options expiry, or is that big dumb? No, there'll be some. There will be exposure. I mean, especially with the JPM collar falling off, right? Do you expect a 43.50 breakdown by tomorrow? Yeah, that's what I'm hoping on. I'm hoping by the end of this week we can see near the JPM collar. I mean, it's in the bull's interest to ensure that we don't ever go below the JPM collar. And it's in the bear's interest for us to move below it as quickly as possible before the market maker starts shedding that hedge, right? I've generally been doing 30 DTE, 10% risk, 20% take profit. I mean, I would say that if your take profit's at 20, your risk is a little high. But as long as you can stick to it, if you've found a way to make that work and you're consistent with your your discipline on managing those positions, then sure. Do you use price targets? Yeah, pretty frequently. I mean, I use stops too, but I also have price targets. Usually a couple. Collar rolls on the 30th. No out of the money zero DTE calls coming in yet. No, not really. 4370 has a little bit of interest. 75, but they're still net negative. I mean, I think this is gonna break down. This doesn't look bullish at all. There's some profit taking on the drop, but I think it'll probably break down again. I think it's got maybe a little more upside left in it before it does. We may retest like 4366 here. At most 4370, but it's not really picking up a lot of momentum for that to happen. So I would say it looks weak. That seems to be pretty true across the board. ES had a stronger bounce, but it's also still weak. Or NQ rather. I didn't see any settlement issue with VIX yesterday. It's just bullshit on Twitter, right? Since JPM collar is at 4320, do they have to pull the SCX down below their level before the quarter ends? Or that's not necessary and they hedge the futures already? It's not necessary, they're already hedged. $25K port down to 15K. Should my 10% allocation be 250 or 150? I mean, technically 250. You would maintain allocation. You can adjust it, but then you're scaling your portfolio down. Thoughts on next weekly BTU CSPs at 20? I don't know. Just look at the yield. Is the yield worth it? $0.13? It's garbage. Do you just want to buy shares? Because you could just buy them. Like if you want a discount below spot, you can sell a 2150, right? 2150 buys you shares at 2080, which is cheaper than the current price. I guess if it continued up next week, no, but then you'd at least get a more substantial yield, right? You get 3.3%, 3.4. Like $20 is like 0.5% yield. It's not like not even worth the time cost. I mean, arguably, I wonder if a buy rate's just better there. I mean, you could do a buy right at 22 and the yield's better. It's still shit, but it's better than CSPs at 20. Have you considered playing Diablo 4 from 8 p.m. to 9 p.m. Eastern today? I might do that. Could you speak to the dynamics between student loan repayment in October plus jump and home starts? What effects on banks, credit, etc.? I understand most student loans are government issued, but is that the end of the sentence? Bear flags don't break down. That's not true. We had one that broke down earlier. I mean, student loan debt resuming is going to be a significant drawdown in consumer spending, right? It's gonna collapse discretionary income pretty much across the board, except for the extremely wealthy, who are less likely to be carrying student debt anyway. I mean, it's definitely gonna help tighten, well, it'll help bring down inflation, but I don't know how much loosening it'll have on the current like credit crunch. But yeah, it's going to reduce consumer sentiment. It's going to reduce discretionary income. Non-essentials will drop. Service sector will probably see a significant decline. It's a lot of money getting sucked out of the system, right? The banks, however, will do well with it. I mean, it'll increase their like net interest income. Probably a few quarters out, but when do you start hedging your swing trades? Do you wait for the position to start moving towards your risk before hedging, or is it right away? I mean, I usually start selling theta on them right away. if we're range bound, I'll probably start selling, you know, like bear call spreads and you know, and selling puts, like shorter dated puts against my like if I have a put position. The reverse is true if I have a call position. But yeah, any like stagnation, or and then if it moves against me, I'll start, you know, I'll start hedging at risk. Do you like Hal at these prices? I don't know what it's trading at today. Give me a second. I mean, it's pretty significantly above my entry prices. I don't know if it's in a bad place, but I probably wouldn't buy it any higher than like 28.50 maybe. I really have no interest in averaging my position up on it, but yeah, I would say probably like the high to mid 20s is a better range if you're looking for a long hold. And really I'd be more patient and probably wait till, you know, like 26 or 25. All it takes is like one shitty earnings, right? What about SoFi? I mean, SoFi is probably overpriced in their exposure to student loans over the last couple weeks. A bunch of short calls got blown up. It'll probably come back down. I don't think they're a bad, like, long hold. I just have no interest in buying them. They're like an $8 billion bank, right? Like they're I'd rather buy like underpriced community banks or regional banks. They have dividends too, which, you know, can go a long way to offsetting your entry price. Any indication that VIX has a break in this constant downward trend before next expiration? The next, like, what, weekly expiration? That's next week. I mean, you don't really track trends on VIX. The drop in VIX is rapid. I mean, compared to historical declines in volatility. Are you gonna play the new Final Fantasy game? Absolutely not. How does one determine risk? I mean, for an individual investor, it's subjective. There are strategies to minimize risk that you can employ. But for trading, I mean, it's a determination you have to make. Probably a good way to determine is, you know, the level of drawdowns on your losing plays versus, you know, the level of profitability on your winning plays. Find some kind of average there. You know, cut losers before they become significant and cut winners before they're likely to fail. How about Lord High DVN? I mean, I've been buying DVN, so like in its current range. I prefer around like the 20, like a 40, 45, $46 range, but 47's not awful. I mean, oil got fucking slapped hard today, so it's not a bad day. They found the submarine, a remote submarine from the Coast Guard. Well, what was left of the submarine? We measure risk in number of popcorn traders. I mean, that's how I manage the risk of my portfolio. I say, what would popcorn trader do? And then I try to do the opposite of that. It's worked out pretty well. I model my risk after banks, which is why I throw risk to the wayside and try to grow my port as fast as humanly possible without any consideration for any possible downside whatsoever. Do you think we push down to 43.50 today? We could. Yeah. I don't think we're necessarily going to, but the opportunity is there. We all watch you make money, but we want to know, what do you spend your money on other than overpriced rent and takeout food in New York City? What Girk likes spend money on? That's all I spend money on. I don't really buy things. And I don't know, occasionally I'll get clothes. I spend an obscene amount of money doing outings. But, I mean, relative to my income, it's not that much. They found a debris field. Unknown if it's the sub. Thoughts? Commercial freezers, espresso machines, cat food. Yeah, but that's like, I mean, all of that's like 5 GME cover calls a week, right? So you're like a dragon? I mean, I buy stocks and I buy assets. Like 95% of the money I make in my trading accounts just gets, you know, moved to other accounts. right? Where it's then, you know, deployed into like long-term investments and safer shit. You bought a house. I mean, I didn't technically buy a house. Well, identified by the Xbox controller floating adjacent to it. Elon Musk and Mark Zuckerberg soon stage a physical fight, according to social media posts by both billionaires. And while it sounds like a joke, it seems like both men are serious. The fight of the century. What if one of them dies? A dragon sitting on a pile of gold coins. I like it. There's a good stream card there. I just don't. I don't know. I get like. I feel guilty about buying shit. Like I get really bad buyer's remorse from being poor. Cause like I'll buy something ridiculous and I'll be like, I can't believe I just spent fucking money on this garbage. I'm okay with spending money on food for some reason. Like I don't care. I'll spend any amount of money on food. I'll spend any amount of money on dates or like parties or events. Like I don't really think about that. But if it's like physical items, I don't like buying them. So no $3,500 Apple VR headset? No. But my espresso machine pays for itself. So I think of the espresso machine more as an investment. If I went across the street and got an espresso every day, it would cost me, you know, like $7 or $8 plus tip every morning. Right? That's 3,600 plus dollars a year, depending on inflation and, you know, if they charge more over time, right? And so the espresso machine was like $2,500 and it lasts for, or well, I guess it was $3,000 and it lasts for like 10 years. And then the cost per shot of espresso is like 8 cents. Plus it's fucking, yeah, it's better. Are you currently wearing your new fancy boat shoes? Those aren't new fancy boat shoes. They're pretty old fancy boat shoes, but no, I'm not wearing any shoes right now. My feet are bare. I just tell people I feel like if we spend money on decent food, it feels like we're okay, no matter what else we have. Yeah, I think so. I think it's like if you grew up and there was ever a scarcity of food when you were growing up, then like buying food is somehow calming. Like if you can afford to eat out, you're doing all right. Right, which is stupid. It's definitely like a poor mentality, but did you ever add risers to the standing desk? No. Ew, gross. Can I buy puts again? Almost. Hmm. One second. Too soon? Hmm. NQ's got a nice recovery here. Yes, not so much. Not gonna fail there again? Looks like resistance is 15,150, so it's NQ is like right at resistance right now. Is that gonna reject? Hmm. I'd wait a bit, like 3 more candles. Maybe. I don't know. I feel like this one might turn around a little faster. I guess I could confirm. Hmm. $70, $75, and $80 call interest moved up. But 65 put interest also moved up. 65 and 50. Ooh. Like an actual battle? That was 2 candles ago. I didn't get any Pepe coin. Best poor person meal recommendations? Spaghetti bolognese? Grilled cheese and tomato soup? Biscuits and gravy? Totino's pizza? End of discussion. I saw one of those at the fucking grocery store the other day. They're like $3 now. They used to be like 60 cents. Fuck that. At 60 cents, you were still like, should I really be eating this? But at $3, it's ridiculous. Totino's has always made whole pizzas. The pizza rolls are disgusting. What's up, turd? How many Carvana puts do you have? Full port Carvana puts? No, I have spreads on it. I have bear spreads. I have a few like shorter dated puts at the money, but mostly just bear spreads. And they're like 30, so it's not really a big deal. Dried beef gravy over toast. Oh yeah, like cream dried beef. $7-Eleven hot dog, Little Caesars hot and ready, Costco. What from Costco? Costco doesn't sell anything that's edible. Just buy more Cardano. I have more than enough, thanks, turd. NQ rejecting yet? Stabilizing. I mean, it rejected off 4150, but it looks like it's gonna test it again. So I'm still waiting. Actually, it rejected off 15147. Hmm. Ooh, that was a little stronger rejection. Slow. Yeah, slow. I'd almost rather it tests like 4385 and we get just call capitulation. I know. Everyone's scared the calls won't capitulate. It's possible. Red Baron frozen pizza greater than Totino's. Fair. Glizzy bake from Costco? Is that where you take a glizzy and you put it inside the chicken bake? I mean, not their food court though. The fucking food in Costco's food court is disgusting. Their pizza is garbage. That chicken bake thing is fucking. I wouldn't even eat that. That's foul. And then their hot dogs are boiled. Ew. And probably a good source of food poisoning. Tombstone was the best pizza. Like the best shitty frozen pizza was Tombstone. Because it had the round pepperonis and the square pepperonis. More demand, Edwin. There's more demand for oil during the summer. I didn't even know they still made Tombstone pizzas. I mean, I live in New York City. I'm not gonna eat fucking frozen pizza. It's disgusting. Although, I have partaken in frozen pizza outside of New York City due to the local pizza being equally bad or worse. Gork, did you buy the put? I have one. I have a buy order for more. It hasn't filled. But I do have one. Godspeed regard. I have a pretty tight stop on them in case it bounces. The last one went really well. I got eyes on the ground here in the Midwest. I can keep tabs on shitty frozen pizza. Alright, fair enough. Paste picante? Ew. Everyone in here is capable of making at least like pico de gallo. And a good pico de gallo too. Okay? Don't settle for anything less than that. Paste picante is like ketchup in a jar with chunks in it. Like chunky ketchup. I'm not sure how confident I am in this breaking down. Fair. Yeah, I'm not really either. I could straddle it. But that's also gross. NQ got its 5150 test. Little more interest, 4380. Still kind of far from that, though. DiGiorno's like the worst frozen pizza. Have you seen some of those raw meat pictures in the Discord? I don't know, you may be giving too much credit. Nestle owns Tombstone. Can't trust a pizza made by a chocolate company. They make the California Pizza Kitchen frozen stuff too. Nestle owns everything. Don't forget Hot Pockets and Sobe. I think they've gotten rid of the croissant pocket, which was the only Hot Pocket worth eating. Why is it possible for calls to go in the money while gamma at the strike is negative? Is it mainly pumping with futures? The futures and NQ are up. I thought a Hot Pocket was where you store stuff when you go to prison. Negative gamma also implies MM buying, selling into price action, not against. I mean, not on the intraday scale, though. Right? Like, the effect of that is minimal. Like, right now, the MM's still definitely selling into upside moves. If VIX goes below 13, do we throw a party? No. That's not happy. Screamin' Sicilian makes frozen stromboli that are basically extra large hot pockets. But they're not croissant pockets. Hot pockets are unique in that they're able to give third-degree burns and frostbite in the same mouthful. Hot pockets should only ever be cooked in an oven. No, not a microwave oven. A real oven. 350 for 32 to 33 minutes. You should also poke 2 little holes in the top of the crust so that the cheese doesn't squirt out the sides. Not that I would know, but the store by me has croissant pockets, but only the breakfast ones. Those are gross, though. NQ's going for 150, 160. Or 15, 160, sorry. I'm glad I waited to buy my Tesla puts. I came very close to buying them earlier. Did I get stopped out of Netflix? Oh, okay, good. Top 3 prepared frozen foods. Those little, like, pigs in blankets from Trader Joe's that are wrapped with, like, Parmesan puff pastry. I don't really eat a lot of frozen foods. I mean, ice cream sandwiches. Do ice cream sandwiches count, or they're not prepared? Carvana to 0? That seems excessive. True story, I lived with a guy in college that made sweet, sweet love to a Hot Pocket on a dare. Not sure which was more sad, the fact that he did it, or that I lived with him another 2 years. Sounds like a good friend. This is whack. I won't hedge, so I'm just here to complain. technically counts, doesn't count. Trader Joe's frozen fried rice. I don't think I've ever had that. How's Lily looking? Like a fortress. I love how Lily ripped on shit earnings. There's been some insider sales recently. They're getting sued by someone else. They got approval for Jardiance for the treatment of type 2 diabetes in children 10 years and older. And they took over yet another biotech company. QQQ. And I could kind of see it moving as high as like 15,250 if it maintains volume on its uptrend. If it fails here, it's probably going back towards like 14,750. Or well, what's that on QQQ? Sorry. So it'd be like 367, and then a failure could drag it back to 354. This is, I mean, both of them found support at their strongest level to the downside, like SPX and QQQ, right? So this is why I said it would probably take longer than this week to continue a breakdown. I will flip the fuck out if I have to deal with even more people getting UTIs from taking Jardiance. Interesting. Well, now children. JPM collars next week. When would they roll it? Day before? No, they usually roll it day of. How much data do you think I need if I have a 350 or 400 PT? I mean, it's not a lot different than buying like a $4,000 put on SPX, right? So probably a pretty good amount. Ooh. FSLR had a little bounce today. Not sure how I feel about that. That's fine. Where would the bot puts roll to? 5% from spot? Well, 2.5 to 5% from spot. I mean, where the collar rolls doesn't really matter. It'll just bring the downside puts. I mean, it'll bring the downside puts into a closer range too, right? I think my sub is sinking. Buy me some puts quick. I'm good for it. Like very, very little calls selling off here. I think, NQ found some resistance. I only have the one put right now for 0 DTEs. I have like one 4365. Maybe if we test 4375, I'll get some 4370s. How you doing, Bithead? Hmm. Yeah, hanging in there. Glad to hear it. Vix, I'm headed out. Vix is stabilizing a little bit here. Hmm. I want to see like at least one more push. Maybe we should buy a call here. I'm gonna buy one. I'm gonna buy a call. 75. Hmm. Fuck. Jimmy cycles as we knew them officially done for? Not, I mean, not done for, just lackluster. As we knew them, yeah, I would say so. For now, until options interest picks up, either by, you know, shifting to a different index or significant changes in the corporate goals, which seem to be currently getting rid of costs. I don't think they're doing anything else. Maybe by a market changing amount of 4380 DTEs. I can't do that. I'm not even sure what the right option to buy here is. Probably the answer is probably not. Any pros, cons on long dated straddles like 4560 DTE? I probably wouldn't do a straddle if I were doing that. I'd probably do a strangle. And yeah, you can trade those. You can buy like long dated strangles and do kind of a similar thing to what I do with short dated straddles, which is, you know, sell the upper and lower range moves right as they occur. So, you know, premium on your call side is going to go up here. Premium on your put side will go up there. How's call pressure on SPXES? Kind of shitty, which is one of the reasons I'm debating whether I should buy a put or a call here. I'm going to wait and just see if I get more confirmation. But the problem is, I think if we get a breakdown, it's going to happen really fast. And so I might just, I mean, I'll probably end up having to buy like another 4365. Overstock wins $21 $21 million bid for Bobby Name, Forbes. Wait, Overstock bought them? That's funny. That's gonna fire up the conspiracy people. Gork, red candle. I know, Dork. Just the IP. Yeah. Vega is higher on closer to the money strike, so you buy more theta, so you can get the extrinsic value multiplier higher, right? So more theta, Vega will go up on further out of the money strikes. Yeah, I'm watching SPX intently right now. I'm gonna buy a put. I'm gonna commit. I'm gonna buy the, yeah. I got a couple more 4365s and two 4370s. They'll just put a stop on him, right? If it bounces back to 4373, I cut him. Where's the sweet spot in terms of profitability? I mean, they all vary, right? It depends on how much you want to pay to take on that position. I mean, the benefit of those is that they're generally low risk, high reward. Right, so the capital outlay is pretty minimal compared to the amount of potential they have. Obviously, that decays alongside their theta, so it's not a position you want to hold for too long. But I mean, you can pick and choose your multiplier based on, you know, how much you think VIX will go up. Bobby isn't a business now. They're bankrupt. They're just a pile of assets waiting for liquidation. Okay, I have my stop set. I'm gonna go get something to eat real fast. I'll be right back. Well, at least I got stopped out. Yeah. My stop was pretty tight. Make a hot pocket. I don't have any hot pockets. I'd have to buy one. What did I want to do? There was something I needed to do. It was important. I got stopped in. They hit my limit buy. That may not be as exciting as you think. Maybe in a minute. I'll run it back, but not yet. A bear call spread Tesla 260, 260, 250 for this Friday. Would you keep it? See if it drops tomorrow, or is this gonna end out of the money? 260, 60, 250. I mean, you're in the money right now. I would say that you're kind of in a risky spot going into Friday. Just got some Wendy's. Line behind the dumpster was long. We must be running. The hedge I bought this morning for the puts I'm buying now are very profitable, but I don't have any day trades left, and this pump ain't gonna last overnight. Cool if it does, though. Yeah, PDT's a bitch. Is your stream card in good taste? I don't know. People die all the time. The only reason this is in the fucking news is because it's a billionaire, so... Wonder why we seldom see $5 moves and 3 candles to the downside. Only up. Inquiring minds want to know. Oh, because we're in a positive gamma environment. So the market maker is buying into falling prices. They're selling into rising prices, but it kind of makes less of a difference. Three billionaires and the son of a billionaire. Whatever. It's also in the news because it was an incredibly dumb thing to do. Yeah. It was pretty fucking stupid. I was being rhetorical. Yeah. Ooh. Let's try it again. So far, so good. Oh, this is gonna push down hard as fuck. Nice. More volume. Yeah, QQQ got rejected hard. Call capitulation? Hmm. Put interest picking up. Yeah, I think this continues. Everybody makes a big deal about the billionaire's kid going to a concert. Stepchild. And the failure on ES wasn't that dramatic. Blink 182 is my stepdad dying therapy music too. What if your stepdad was a billionaire? Who steps on their child? You people are ridiculous. Vix is dying off screen. Yeah. Nope, 13. Ooh, interesting. This is so hot. Are you looking at VVix right now? stuff. I don't think you were gonna ask. Well, hold on, I'll DM it to you. Actually, yeah. There's some butt stuff. Are they selling puts again? Probably, but I don't think very long dated ones. They're also not like leveraging up big out of the money. Probably close around 43.75, 43.80. Yeah, VIX, well, just under 13. Secret VIX short squeeze DD. Do you think this sells off hard or holds into close? That's a good question. I mean, there's not a lot of out of the money call interest, so I guess if there's profit taking, but we really haven't hit the level we need to hit for them to take profits, right? So for profit taking to happen, we need to either move above, well, we need to be a bit above 43.78 or 43.80. And we really haven't gotten even close to the strike yet. Like, I think the closest we got was right here. Briefly, and we got some call capitulation there, but not a lot of it. So I still think they're gonna aim for a test at 43.80. That'll be important. Although, well, I guess if we broke below 43.70 here, they might capitulate anyway. But that doesn't really make sense. Why are VIX calls so expensive? The call skew is like 13. Do you think the bottom's in? No. It's like 13, it's like 12 point something X. Do you think the top is out? I hope so. I hope 44, 48 was our top. When VIX calls YOLO, they're overpriced. You have to get exposure to volatility somewhere else. If people really want to know, go look at the VIX term structure on futures. Futures market pricing much higher vol. The VIX options have to match the put call parity on the high values. Why do you now I have to explain like 4 things. Why'd you do this to me? I'm gonna go get my food. Jesus fucking Christ. Still no test of 4380? New ringtone? Oh no, that's just the timer. That's like the timer on my phone. Not for my Totinos. I made the I don't know, someone brought something up earlier and I discussed the tiny like gourmet pigs in blankets that they sell at Trader Joe's, and then I realized I own some, and then I cooked them. I got a little Dijon and some spicy mustard. Then I'm gonna go to town. Gherk, I fucking love this new vape. Thank you. You're welcome, man. Yeah. Yeah. The AI hype train ending could seriously impact Upstart. Calls aren't gone yet. If this is T+2 action, it looks to me like the upward momentum might be gone. Might be done. Any thoughts on what could keep the markets going up here? Well, I mean, yeah, all those sold short puts that they don't want going in the money. They're extremely crunchy. Why is no one called bullshit on the VIX suppression? I mean, it's more a metric of, you know, the convexity of risk not being appropriately factored into current positioning, right? Than it is like VIX suppression. Basically, no one's getting further dated puts 10% out of the money to protect the downside. Which is why we're seeing, you know, like the tail risk index increase. I mean, if you want to drive the VIX down, you want to sell puts between 23 and 30 days to expiration. You could do that, although that's not VIX long. That'd be what is it called, VNQ or whatever. The NASDAQ 100 has its own volatility index. When do they cut the calls? When they get them in the money? Are those any specific type of sausage? They're like little uncured hot dogs. Should be selling them when they get in the money. Is holding for chumps. Selling what? Why are all the bank stocks dipping after all the testimony about how strong and secure our banking system is? Doesn't make sense. Investors are scared of the risk that Basel III presents. Should the U.S. agree to adopt it? Which we likely will. There we go. Now we can see if calls capitulate. If there's not enough capitulation, more calls will come in. I don't know about 4,400, but 4,390 is definitely possible. Why are we moving up today? I'm at work and just got back to the stream. I think we're seeing the repositioning of the delta neutral positions that we're taking going into the Fed meeting. Because once again, I'm not seeing big out of the money positions above like 4,400. And even the 4,380 position is small compared to what we've seen recently. Really, really fucking small. Oh yeah, I forgot to check. What was the unemployment data like today? Initial jobless claims flat. 4-week jobless claims up. Continuing jobless claims down a little. Okay. Interesting. They aren't selling off fast enough. More ups here. Yeah, if it finds support, it could go up more. Like ES and NQ's getting rejected a little bit, but ES really isn't. Why would I watch the submarine press conference? You were told incorrectly, Brett. Could the pumper be stuck in a position where they don't have the margin to hedge with puts and die if equities drop? Well, we know they have theta on the 4,400 sold puts, right? Which is the largest accumulation of puts to the upside. So, because we haven't dropped below 43.50, we should consider that they're going to try to probably rescue those puts, right? That doesn't mean they're going to be successful in their attempt. But if they can get those puts back at or in the money, they can close them or hedge them. I mean, they've been selling the fuck out of VIX for like the last 2 days, and the market hasn't gone up, right? diminishing returns. Looking at Gamma Charm Vana. Are you, though? Seems like only futures will cause any big moves the rest of the day. Probably. I mean, NQ most of all. It seems to have the most volume right now. Is it fair to say liquidity has been back since the recent banking crisis? Well, it was for a while. Now it's about at the levels it was prior to the banking crisis. Yes, it's largely the reason for the pump. Do you still think this is a risk-off pump? Well, the liquidity is temporary, so... No. Not really any call capitulation, but all the calls are still basically at 43.80. How are we right back in the pumps? Why, Bruce, why are you so melodramatic with your statements? How is this back in the pumps? It's some upside. You can probably expect a little more tomorrow. But that's not like right back in the pumps. I mean, this is like a slow, shitty, low volume grind up. VIX is dropping at an even faster rate, and they're getting less upside out of the leverage. Because this bull market that only goes up in the intraday, down only overnight. The deeper downs are overnight. More ups tomorrow? Higher chance of them, yeah. I'd say it's going to greatly depend on where we close today. We all complain too much. It's the rate of the complaining that's shocking. Like, we'll move from like 43.73 to like 43.80, like a $7 move, and everyone's lost their mind already. I get it if we're going up like 200 BPS in a day, I really do, but we're up 30 BPS after 4 days of consistent downs. 3. Did you realize that your viewers aren't playing thousands of contracts like you, right? Yeah, I know. That doesn't mean they're not probably playing more than they should. I also don't have thousands of SPX contracts. It's fucking ridiculous. Except that VIX is so low, it crushes out any profits on downside moves. Well, not if the contracts go in the money. You still get delta. I don't even know if I have 100 contracts on SPX open right now. Never mind. Anyway, but that's not the point. The point is, you know, prices here, price targets here, right? The path to that price target is not generally going to be that. Right? It's probably going to, you know, have some fluctuations in the interim. Like, if you can't even just pull out to the 5 fucking minute and relax a little bit and stop freaking out over every $7 move. If a $7 move is greatly affecting your portfolio on an index, you probably need to be playing a different instrument. Right? Less exposure, you're overexposed. If a move from 43.73 to 43.80 scares the shit out of you, you're massively overexposed. Every dollar SPX moves financially ruins me. What if it just moderately annoys you? It does. Coast Guard found the sub, it imploded. Well, mystery solved. Imploded is good, right? I mean, It's a less horrific way of dying. Don't go 13,000 feet underwater is my motto. Hey, Trina. Had dark thoughts about how they were slowly dying in agony. Why? Are you getting in a submarine sometime soon? I don't understand those levels of empathy. Like, if I knew them, I'd be like, ah, fuck, that really sucks. But they were gone instantaneously. Yeah, I mean, if that depressurized at 13,000 feet underwater, poof. I'm sitting my lunch at my desk with you and these weird people in the chat. It's better than dying in a submarine. Yeah. The Titanic's still increasing its KD ratio all these years later. Did they actually find the wreckage, or are they just saying that because they don't want to fucking go down there and look anymore? Seriously. They found the front and rear ends of the capsule. Oh. Did you guys hear about the hundreds of refugees that drowned off the coast of the US? Yeah, neither did anyone else. I mean, I saw a news story about it, but it wasn't like blown out of proportion like 3 billionaires playing Russian roulette. Pieces were found 1,600 feet from the bow of the Titanic. What's the world coming to? Why can't people just stay alive? We've never been particularly good at it as a species. Most people who've ever lived have died. When you become a billionaire, you think you're invincible. Yeah, rich people do some stupid shit. Like, really stupid shit. Well, what? I'm not censoring any of my bites. I just ate like an entire fucking meal in front of everyone. What are you talking about? Seems like a sample bias. If you interviewed everyone who has played Russian roulette, you'd conclude it's safe. Fair enough. 1 second. Explain that statement. Most people who have ever lived have died. Shouldn't it be everyone is born to die? I mean, yours is more metaphorical. Houston Wade said the bubble window wasn't rated for the depths and the company refused to upgrade it. I'm pretty sure Houston Wade's a waiter. And I don't think his opinion on deep sea submersibles is valid or matters. Even if he's like a geologist or whatever, still not an expert on submersibles. Vix is finally young enough that you can't marry it in Arkansas. You've been waiting a month to say that, haven't you? It wasn't an orca, it was clearly a pigeon of the whale variety. The pigeon whales have no comment on the situation. Although none of them got in a fucking submarine. The only way I'd ever get in a submarine is if the US government had paid so much money for it that it could never sink. It's got to be worth at least $10 billion, right? If not more. Why didn't Elon build a tinier sub to rescue them? I mean, it sounds like the structure of the sub failed, right? There was no rescue. Yeah, it failed way deep down. Like 12,000 fucking feet underwater. Mechanical engineer here. That vessel was nuts. Made of carbon fiber, never tested to those depths. Everything was underrated, and they were warned by other submersible companies that it was nuts. Yeah, I've seen some of the reports. It was originally an Alabama joke, but I feel like Arkansas gets off too easy with the jokes. No, fair enough. I know we don't talk about GME too much. We talk about it probably more than it needs to be talked about right now. But Paul Dano does not do justice to DFV. His sincerity in speech does a disservice to DFV's charismatic inspiration. Listen, nobody liked DFV until he made the money, all right? You're looking at it through rose-colored glasses, but I agree. They have chosen a poor representation of him. I got a decommissioned World War II sub once, but it was at port, so no risk of sinking. Okay. No, that's not. You're not going underwater in it. Then it's just a boat, right? No, they got crushed. It means they're down there, but really small. So you guys saw that tube on the news, right? Imagine 5 people are in that tube, and then it instantly became a soda can. That's what happened. But like a crushed soda can. Criminal negligence. International waters. But yeah, I agree. Stop touching me. 5-for-1 reverse split at market open. I think the underwater aliens got them. All right, much better thesis. More like instantly became shreds of carbon fiber in a red cloud. My worst fear, oddly specific, is underwater cave diving and losing my way back. Glad to say slowly suffocating at 15,000 feet deep doesn't get added to the top. I think what this whole situation has brought to light is that a lot of people are really afraid of suffocating in submarines. I wonder how the Navy trains it out of people. Hmm. Anyone ever looked into the theory the Titanic was actually the Olympic? Sinking in part was in part an insurance play plus hit to knock off the 3 big numbers who were anti-passing the Fed circa 1912. I love my conspiracies. Okay, Jedward. That's ridiculous. The captain of the Titanic, who hit the fucking iceberg, went down with the ship. Now, if the captain had run away, sure, I'd give you some credence on that. New reports of a giant squid in the vicinity of RMS Titanic within the last week. Maybe he got hungry. I doubt it. It's not like a fucking sea monster. It's just a giant squid. Appropriately named Lawrence. So many things not to like. Claustrophobia, drowning, sharks. They don't. There's a lot of PTSD from sub-crewmen. Also, frequent open air. Humans aren't meant to not see the sun regularly. Awkward. I'll do something that address that this week. Maybe. The orcas figured out how to open the can of humans. There's no orcas at 12,000 feet. Never mind. I'd be remiss if I neglected to point out your superior rugged handsomeness. Also, a la Bob Barker's spaying note, please remember to get your scaping done on the clock. Absolutely. Why did Bob Barker want to fucking neuter so many animals? What a sick fuck. More choppy action tomorrow? Is this really that choppy? I feel like we've started going down, right? We're getting the like slow capitulation that we wanted. We've moved away from 4380, which is nice. My puts are almost up. They don't have a lot of time left. I've never seen so many people make fun of a tragedy like this one. It's not a fucking tragedy. They were idiots. If someone goes base jumping and dies, you're not like, ah, what a loss. You go, that guy's a moron, right? Being an idiot is a tragedy, though. If anything, I think it might be inspirational. It shows that no matter how dumb you are, you can still be a billionaire. I think the most important thing we've learned today is that if you're a billionaire, you should act like a good billionaire and just waste money on Brazilian puts and caviar. You should do what Warren Buffett does. Travel from your office to your home, stop at McDonald's on the way, twice a day. That's why he's still alive. Fucking guy's like 180. The last few seconds of being alive must have been so scary. Probably not. They probably were like, ooh, Titanic, and then poof, dead. If anything, take solace in the fact that their last moment of living was one of wonder, where they got to look at an old ship that had sunk in the same place. What's up, Gorg? I just got back from a walk. Red candles. Yep. 43.75 puts are up. 43.65 puts getting tired. Getting very, very tired. Very quickly. Yeah. You think they actually made it all the way down that far? I bet they died halfway. Well, then they were full of anticipation for the coming wonder. I don't know. I don't really understand that emotion very well, but I'd imagine it's like the walk home from a bar with someone that's agreed to sleep with you, you know? I've never been in a submarine, so just in, Titanic claims 5 more victims 111 years later. Does this mean James Cameron's gonna make Titanic 2? How could he not? I think it's the one instance where having a ton of money didn't increase their chance of survival. Like, if you have enough money on land, you can buy the best doctors to keep you alive. True. Although, I feel like there's a lot of instances of rich people dying, and Paul Walker. Paul Walker drove too fast on residential streets and then wiped himself out on a pole, right? Or his friend did. Well, either way. Right, so in the act of committing a crime, Paul Walker died. Everyone real sad about it. I guess because he was family. Yeah. He died a hero. Gabe Newell owns a better sub that has gone much deeper. Well, to the deepest parts of the Pacific, it's got good valves. For a second there, I thought you were going to go with Gabe Plotkin because nobody's been more underwater than that guy. That was a great joke. Fuck you, Popcorn Trader. 3 out of 10. Would Amazon have rocketed if Bezos had exploded in his? In his penis? His penis rocket? No. Amazon would have tanked, even though he's no longer the CEO. Paul Walker dying in a street race was poetic. Well, it really brought a lot more depth to the prior Fast and the Furious movies because you realize he wasn't pretending to be a douchebag. He really was one. Method acting. Bill Huang? Bill Huang's like the guy who loaded CS's portfolio into the submarine. The submarine deaths are also poetic because, like their hopes and dreams of seeing the Titanic, they were also crushed. Well, we still don't know if they saw the Titanic or not. The market is offended by your guy's dark humor and is rocketing his punishment. Or is it just rocketing because out of the money calls are now 5 cents and bulls think they can save themselves? Imagine buying SPX at 44.50. That position has a lot of pressure. Why do I feel like it's always you requesting new channels? Who put you up to this? How's positioning looking into tomorrow? End of week pump like usual? Maybe. There's still enough fucking stray bulls running around that on Wall Street bets is gonna inevitably jump on 0 DTEs. So it's possible. Or they just get destroyed. We'll see. I mean, longer term positioning's been breaking down all week, so. The fuck was I just looking for? Oh. I don't know, but I need help with math. What kind of math are you trying to do? I was thinking maybe you could give us a practice math problems from I know my 1, 2, 3s in that channel. Okay. I like this. Gherk, School of Stock, how to leverage like Bill Huang to build capital. Want to build a sub? Looks like TAM has increased. How much does it cost to build a sub? Why can't they just like go look at wrecks in the like pirate wrecks in the Caribbean, like other people who want to see shit underwater and like glass bottom boats? Chances of survival way higher. Good call holding off on Tesla puts. Well, do you think Ford's $9.2 billion federal loan to build 3 new battery plants will put more pressure on Tesla? Yeah. Also, Walmart's planned rollout of their own charging infrastructure. Tesla's getting gangbanged right now by Toyota, Walmart, and Ford. It's gonna be rough. It's gonna be rough for Elon. He's never taken that many dicks at once. That we know of. Because of the pirates? Ridiculous. You could put all the pickle jar puts in a museum and then could see how underwater things can get. Reaching, but all right. He's about to be up to his eyeballs in horses. Does Walmart have the R&D to build an actual competitive charging infrastructure? You mean money? Yes, they have money. You know what else they have? Property. On which to put the charging station. Space. Yeah, and that. So it was approximately 1,600 feet from the bow of the Titanic, U.S. Navy. Well, that's where it landed. We don't know where it blew up. Billionaire shark bait. There needs to be a game show where billionaires take on life or death challenges and we get to watch the results live. Hold on. Even better is if they die, everyone in attendance splits their money. It's like the opposite of Hunger Games. But how are they going to figure out how to move electricity through a wire? Why not just buy Tesla superchargers? Because fuck them. What kind of communist statement is that? That's not what America's built on. You hear me? Okay. I think my USB hub just shorted out or got fucked. All right. Oh no, Gert got canceled as soon as he said communism. The Waltons are notorious for collaborating with local businesses to create synergistic ecosystem. One time my grandfather was doing renovations on a set of stairs that gave way. Until this year, that was the biggest drop I'd seen until the VIX. Is selling CSPs on VIX a bad idea? It's worthless. ETF FTD is through tomorrow? IWM. Could VIX sub 13 on their MOASS bingo card? Not me. I always feel smart when I hedge my puts by selling a shorter term put and using those funds to buy a call. Nice. Nothing like having your market make or pay for your hedge. Nvidia down 53 BPS while QQQ rising. Thoughts? I mean, other parts of QQQ are up today, right? Apple, Amazon, Google, Microsoft. Who still has their MOASS bingo card? Is a better question. There's at least 800 people. Gherk, I just need SPX to drop $100 overnight. That'd be fantastic. Fubo 721, $2 cover calls, $50% in the money. Worth pulling them for FTDs this week? I don't know. What's Fubo at today? Wait, how are they in? You sold them in the money? Yeah, so you're up 50%. I mean, you could. You've already hit decent profitability on them, right? I think he's saying it's up 50%, not 50% in the money. Yeah. I don't know. How far below historic volatility is VIX right now? Huh. Well, historic volatility is like 0.147. Interesting. Is that correct? Oh. Current break even on a call is 500. Break even on puts is 337. This is for SPY. Oh, okay. This is SPY. Yeah, yesterday, 3-month vol index for CBOE was 16.89, which is a little bit closer to where futures are. I think VX is at, well, VX is down a lot today too, 15.75. Yeah, I know VIX has gone lower than this before. But that was also like before Volmageddon, right? VIX at cold fusion and world peace in same week levels. Supreme Court was going to rule on the student loan thing today. Did that news drop? Not as far as I'm aware. What a silly pair of candles that was. That was a bit odd. Looks like we're closing at 43.80. I'll just say that VVIX has spent the majority of the past 15 years higher than it is now. Holy moly, VIX ripping all the way back to 1285. That's a funny way of saying 4,400. Yeah, there's a fairly decent divergence in price on SPX versus ES1 right now. And NQ is like way the fuck out of sync with the rest of the indexes. Up 113 basis points today. Oil's down 400 basis points. Dixie up. BTC calmed down a little bit today. Yields are rocketing again. I wonder, Dork. Ding ding. The day is done. SPX closing 431.81.84. VIX closing sub $13. Yeah, QQQ was definitely the front runner for today's price action. Today's also T+2, so you know, we discussed a little earlier how that affects the underlying more than the indexes themselves, but with T+2 now out of the way, and remember Friday was a hell of a rally, we'll see how positioning looks tonight. It has, for the most part this week, been breaking down, especially longer dated call positions. So hopefully we continue to see more on that front. there was some out of the money call interest today. Most of it got burned up, with the exception of the 4380 calls, 4390 and 4400, which were the next two highest strikes. Didn't really see any action. So yeah, we'll see how this carries overnight. I think positioning tomorrow is going to be important, because with a little bit of pump today, we're going to have a lot of zero DT interest tomorrow, and that can drive underlyings a little higher. Thanks, Gaff. They're going to try and fill that 4,400 gap, and maybe it's only $20 off. It could also just fill overnight, right? Thank you guys so much for tuning in, and I'll see you bright and early tomorrow. Have a good night, everybody. Later.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult.